All right, good morning, everybody. Hope you guys are doing well. Yeah, we got a decent amount of stuff to talk about today. It's a new month. It's every day, every week, every month. There's a particular process that we have to go through, or at least that I have to go through. I don't know about everybody else. But just going to be another one of those pieces to the overall system that we operate within. The luxury of having or learning from ICT over the years, it affords you the ability to create your own systems. Like you learn all the topics and then you figure out what works for you. And it makes it so every trader's experience is unique. So that's another reason why, I haven't moved to other stuff, right? I started out doing other things until I saw the world of smart money ICT concepts, So you guys should take solace in the fact that, we get to have our own stuff, right? People may trade the same models, like, for example, the YouTube model, breakers, or whatever the hell they want to engage with or create their model around. But at the end of the day, every trader's entries will be unique. Everything that people see, a lot of times, things could align in some form or fashion, but we're allowed to, because of ICT's style of teaching and the vast amount of knowledge, we're basically allowed to create our own systems. So everything is unique to you, But of course, you can't figure out that unique system or even think about creating your own way of doing things. You can't even have that opportunity if you don't dig into majority of the concepts. I know that when I first started using ICT concepts, I didn't understand anything. I don't come from a family that invests. I have nobody that invests. Matter of fact, everybody's financially illiterate. Okay. So I had to lean on whoever I could. And obviously ICT and the traders that have done very well with his stuff, if they're gracious enough and open to helping, I mean, it's a blessing to this industry. So maybe when you guys find yourselves, and I'm grateful if I play a role in that, a small, tiny, itty bitty role. But once you guys find yourselves in your system, and maybe you take some of the things that we talk about and put them into your own way of doing things, maybe you can pass the blessing on as well. Because that's why I'm on social media at all, is just to pass the blessing on. And so yeah, hope that's something that you guys could find inspiring, right? To go ahead and go do that on your own as well. I'd love to see it, and I'd watch y'all. So, but yeah, thank you guys for hopping on. As always, greatly appreciate it. There's so many people you could listen to, but the fact you come here, it's greatly appreciated. So yeah, let's actually start with the news real quick. It's NFP week. So how many of you guys that are on right now have a process you adjust to when things like FOMC, NFP, CPI, interest rate announcements, Fed speeches, right, come into play? How many of you guys have a adjusted system or way of doing things around those particular events? Let me know in the chat. Because if you don't, we'll talk about that. Otherwise, if you guys do, we could just jump right into the analysis. I trade smaller with micros. Okay. Past 3 times have been successful. Tony, so do you have a process in terms of at least being aware that there should be an adjustment? Like Tilt said, he lowers his lot sizes. Sufi Asian trader here, so it doesn't matter. Oh yeah, true. I mean, actually, that's not necessarily true, Sufi, because all throughout the day, the news events like what I just mentioned are always considered, and most times the volume will be lower, right? Because they're trying to build up for the anticipation of the manipulation. So it does somewhat affect sessions outside of when the announcement takes place. A lot of times, that's why, for example, ICT mentions a rule where the beginning of the week, right, Monday and Tuesday are generally the better days to trade because those aren't as impacted as the day before, the day of, and sometimes the day after holidays as well. But then also the day before and the day after the large news events like FOMC, NFP, so on and so forth. So it actually does affect the overall sentiment in the market and how things are going to deliver, whether they're going to be clean or not, so on and so forth. So keep that in mind, right? But yeah, you definitely aren't going to face the punishment of trying to get in front of those events. You should never do that. If you do trade it, if you want to trade or if you must trade for whatever reason, which I don't think you should have that mindset, thinking that you must trade even when those events take place. But if you must trade it, right, or if you want to study it and see what and start studying when things start to open up and get a little bit more clean, you can pretty much just look at it 45 minutes after, 30 to 45 minutes after, sometimes an hour after, because then you're engaging or looking to engage after the chaos. So whatever liquidity is there intraday that's available, may sometimes offer, more loose markets instead of the vicious one-sided manipulation for the most part. CPI is a one-sided news event. FOMC and NFP generally are a two-stage event. So the first move upon the open, or upon the the announcement, generally will be the fake move, triggering some type of liquidity from the list that we talk about. And then, of course, 45 minutes to an hour after, if all that's already taken place, the second stage of that event may have already operated. So then you can reasonably make an argument for whatever liquidity that's available to be targeted. But yeah, it's not something to fear. You don't fear anything in the market. The reason being is if you have your risk rules in place, what is there to fear besides the fact that we let our ambition get ahead of reality sometimes. We think that if we take a loss, I'm never going to get this, or it's going to take years and years and years because I had a bad day. Well, that's just not the right way of thinking. You want to make sure that you understand the times when price is going to be a little more difficult. And of course, NFP, FOMC, those types of events, holidays, the day before, day of, day after, you want to make sure you're... Tilt said something nice, right? He said he wants to, or he drops his risk with smaller volume. Not only that, just to add on to what you said, Tilt, you trade smaller, but also limit the amount of trades you allow yourself to take, right? Because just because you lower the amount doesn't mean you increase the velocity, right? In terms of like how many trades. Generally here in this channel in my communities, I operate within 1 to 2 trades a day. I don't care what day it is. I don't care what the conditions look like. I don't care at all. It doesn't matter, right? It's always 1 to 2 trades a day. And that, like, the reason that that's there is because I used to deal with over trading. I used to deal with over leveraging. So in order to mitigate that, from what I've learned over the years, you have to create rules that prevent you from falling into particular mistakes. And then once you set those specific rules, you want to make sure you're following them and understand why. Because it's great for me to tell you a bunch of different rules, or whoever to tell you guys a bunch of rules. But I've learned, at least for myself, I need to know why. Like, why should I follow that? Like, for example, we got to cross the street and look both ways. If we don't know why, we'll go in and probably disrespect that rule and get run over by a car, right? So it's the same thing with trading. When you set rules for yourself, you have to understand why. And a lot of people like to spew PDFs and do all these things and give all these rules, and they don't explain why it's important for the new trader that's not had the experiences or doesn't understand why certain things should be the way that they are, right? So lowering your amount of lot sizes on days like this, or weeks like this, right? Ahead of weeks like this, on days where big news events come out, or holiday volume, right? Day before, day of, day after. And then, of course, limiting the amount of trades you take. I mean, it's very important. And if you just make it a cemented goal that you're only going to take 1 to 2 trades a day, the reason is, you won't blow your account ever. You'll never give yourself a chance to do that. And that's so critical, because if you can trust yourself, 'cause that's a big thing too. If you don't trust yourself to be disciplined and you don't know why these rules are in place, it's a lot easier for us to just fall out of alignment with the things that we're telling ourselves to do. So whenever you have mistakes, set rules around them and explain to yourself why. Remember the pain you felt for breaking those rules. Overtrading and overleveraging are the two main issues that majority of people fail at trading with. And a lot of times it's because our ambition gets ahead of reality and how this environment really is in terms of the markets as a whole. You don't see professionals. I mean, some professionals go in there and send a ton of different entries in, but they got a whole system around that. For me, right, for many other traders, majority of them, overtrading in any capacity is incorrect, because you're just fueling bad habits. So then when you take a loss or you take a bad losing day, you're not going to be accepting of that. You're going to think, oh, well, I took a bunch of trades, maybe I'll be able to get it back. And then if you disregard the conditions like NFP, FOMC, and the way certain times of the year behaves, like seasonality-wise, you're not allowing yourself to build the skill set of knowing when to trade, when not to trade. You know what I mean? So it's vitally important. And that's, the reason I'm starting here for today's call is because of, the damage that can be caused by weeks like this, Again, it's not something to fear. You don't fear anything in the market. And the way that you can get to the, fearless mentality when it comes to risk control is by doing just that, having risk control and rules wrapped around your system, no matter what the condition is, that allow you to have a defense mechanism against particular mistakes. Okay, 1 to 2 trades a day, max. It's impossible to blow your account unless, of course, you over leverage. But then again, you don't over leverage, because that's not going to get you there quicker. No matter how many people you see, flipping accounts, right, like 1,000 accounts, right, $1,000 accounts or whatever, to 20 grand or whatever the hell you see. Those people are gambling, whether they got the skill or not. Longevity wise, for a new trader, you're not going to be able to emulate that, and they probably have money to throw away. Right, so there's certain circumstances that other people have versus others that you also have to keep in mind. But lowering your risk, like Tilt said, is a very eventful thing to do, very worthy way of operating during weeks and days like NFP, FOMC, so on and so forth. Lowering the amount of trades, setting a non-negotiable rule where you only take 1 to 2 trades a day. Also for the week perspective, if you take 3 days of straight losses, and of course you've been, keeping your risk within those rules, the 1 to 2 trades a day, and, lowering your risk if necessary for weeks like this, you want to make sure that, well, how about this? Let's actually break down the overall risk plan that I operate within, because I'm not Till. I know that you're probably new, and Sufi, I'm not sure if I've ever been able to tell you this. And Tony, I think you've already heard this, but as a whole, right? If you, for the week perspective, you want to disregard the week if you lose 3 in a row, 3 days, right? But before that, right, the 1 to 2 trades a day, You want to make sure that if you take one trade and you lose that trade, say you're risking 1%, right? You want to then drop your risk by half. Every time you take a loss, you drop it by half, at least that first loss, drop it by half. So the next trade would be then at half risk. And so remember what I was saying about the why, right? Why is that important? First of all, you won't blow your account. And that's very critical. You got to be alive in order to take advantage of opportunities. Okay, so if you take a trade, you drop it by half on the next trade and keep it there until you make back what you lost. That makes it so the losses aren't so painful, and it allows you time to get back in alignment. You never know what could be taking place. Maybe you're wrong. Maybe you missed something, Okay, perfect. I love your mindset, bro. I love your mindset, Sufi. Always down to relearn things. Because, there's a lot of that I had to do at the beginning, too, because we get fooled by a lot of nonsense on social media, sadly, and it puts a bad taste in people's mouth about this industry. And, this industry allows opportunity for anyone, no matter what your background is, so it's a blessing. But so again, 1 to 2 trades a day. Drop your risk by half if you take a loss. The reason that's important is so you can give yourself time. And also, it allows for your equity curve to look better. It makes it look a lot smoother than if you were just taking 1% every trade and losing 1%, 1%, right? If you trade, for example, 1% and you take a loss, that first loss, and you're only going to take one more trade because you're within your rules of 1 to 2 trades a day no matter what, the next trade is 0.5%. So in reality, the largest losing day you can have in a single day is 1.5%. If you must take a third trade for whatever reason, maybe you trust in your system or whatever the case may be, you definitely it's not encouraged to break any of your rules. But if maybe you have a 1 to 3 trade opportunity, right, or structure to your risk plan, which is there's nothing wrong with that. But again, you want to make sure you know what you're doing if you adjust things and give yourself more engagements, right? But if you must take that third trade, you do the same thing, right? You drop that previous risk by half. So if that's the framework you operate within, 1 to 3 trades a day, then your max loss in one day is 1.75%, not even hitting the 2%. Okay, and 1.75% is a lot easier to make back and a lot, softer on your mental capital when it comes to, taking losses or whatever, than if you were trading 3 trades 1% each, because now you're down 3%. And that looks a whole, believe it or not, it looks a whole lot scarier when you look at your account and that's what took place versus 1.75%, or better yet, 1.5% because you stuck to the 2 trades a day rule, right? Like Tilt said earlier, right? He said he trades smaller. Very, very important on weeks like this. You shouldn't be in here on NFP or FOMC or any of the other news days trying to swing for the fences because it's volatile. Just because there's heavy volatility doesn't mean that there's more opportunity. Yes, there could be an argument that you'll get larger moves, but then again, you also have to look at the negative side too. You can take bigger losses that won't respect your stop loss. That's happened to me 4 times in the last 5-6 years, and I was risking 500, ended up losing 1,700 because it just blew off and I broke my rules. So from that point on, I stopped. I was like, this is not acceptable, because it's unnecessary pain that my rules are there to protect me from. Okay, so so 1 to 2 trades a day, right? If you start at 1%, hypothetically, your second trade, if you take the first loss, drops by half. Okay, and if you must take a third trade, right, because everyone's different, some want to use one framework over another, but if you must take a third trade, you drop the second loss by half as well. And then if you end the day with those losses, you move on to the next day with that cut risk. You don't go back to your normal risk until you make all of it back. And again, why is that there? That's there literally to simply protect your equity curve and make it less damaging when you do face the inevitable losing streaks. And then if you have a week where you lose 3 days in a row, right, you want to make sure that you put it to the side. Come back the next week. Use that time to adjust, to reevaluate what's going on, and to calm yourself down. Because I don't really follow this guy's stuff much, right? Like at first, when I was first learning, because he's a big influencer, I wanted to get as much knowledge and information as I could from those that seem like they do well. But this guy named Raja Banks, right? You guys have probably heard of him. He's really, really large influencer. He had a very interesting conversation about trading psychology that I saw. And he was pretty much talking about how he has a professional psychologist that he works with over the last, like 8 years or whatever. And pretty much this psychologist told him, when it comes to trading, because it's such a high stress environment, 2 trades max, especially if you take 2 consecutive losses, is all our rational portion of our brain can handle to make high risk, high stress decisions. Okay, so that's in part, aside from what ICT has said, he also recommends 1 to 2 trades a day. That's it, or maybe 1 if things are crazy. Also, depending on how you feel that day. But the 2 trades is also backed up by psychology studies. So it's not just like, oh, I just think about this idea and because I said so. No, it's actually taken from someone that paid for professional psychologists to give them some information. Yeah, I know there's a lot of people that hate ICT, but hey, I don't hate on them. I don't want to trade the way they trade because I found my way. But yeah, and mind you, it's a battle between egos. I feel like too, a lot of the hate, so. Yeah, I mean, again, there's a lot of people that get supercharged by what happens in the public sphere between influencers. But, we kind of just got to put it to the side. Like, if he hates who cares, right? But yeah, that is a fact. He hates ICT. And it's, partly because it's a competition, And if ICT was more open to meeting up with people in real life, like a lot of these other influencers are, I'm sure most people wouldn't have such a hateful situation. But hate sells, causing, like ICT says, where there's smoke, there's fire. And people are going to come and check out what's going on. Where's the smoke coming from? So drama is like a really good marketing tactic. So that's probably what both of them were doing as well. And, smart money concepts is massive. So, of course, anyone that doesn't trade smart money concepts, why would you not want to throw hate that way to get people to come and look at what you're doing? I mean, it's very rational strategy, if you ask me. But, whether it's true or not, whether they actually hate each other or not, remains to be seen. Find a way. Yeah, exactly, Sufi, exactly. ICT through hate posts. Yeah. Yeah, me too. Yeah, ICT has probably thrown fire at everybody. Because, that's how he grew long term. A long time ago without putting any ads, because he'd just show up, set everything ablaze in people's chat boxes, and people would be like, who the heck is this guy? Because maybe they like the other educator, and they go look at ICT, and then, for the most part, most of them convert if they're actually serious and want to get real technical and figure out, like I mentioned earlier, the why behind things. You know what I mean? But yeah, so I hope that the daily risk protocols make sense. 1 to 2 trades a day, right? If you take 1 loss, your next opportunity is cut by half. If you want to work within the 3 trades a day rule or framework, you should probably also, just to add an addition to that, if you say normally you trade 1%, maybe you should start the day with 0.75%, right? So then the next trade's 0.5%, and then the third trade will be 0.25%, so you don't lose the full overall risk that you want to actually operate within, which in this example is 1%. But of course, if you're new, you probably want to start with 0.5% anyways, right, or 7.75%, because it's like going into battle where bullets are flying and you just got into the military. Right? Like, you need to go through training first, before you can jump into real action that's live and can really cause some pain, right? So yeah, I hope that risk perspective makes sense. But don't you, here Sufi said, but don't you think 1 to 2 trades is holding you back? I mean, that is an argument that I've heard people say. But over the years, I've realized that, especially when I heard what the psychologist that Raja Banks was talking about, when we take more than 2 or make 2 high stress decisions, after that, we're basically winging it. Because now, especially if we took losses, because now we're thinking like, oh my God, I want to make it back, right? If you notice, if you go back and study some of the times where maybe you took more than 2 trades, if you journal after that second trade how you're feeling, if you took 2 losses, this is how I also figured out the efficacy to this. Besides just aside from just listening to what was being said, I saw it in my own trading, and I was like, whoa, like whoa, my mindset just tanks after those 2 trades, Yeah, because I'm strict with 1 to 2 trades. I did try to get reps in and got wrecked and realized 1 to 2. Yeah. And I mean, that's the thing. Like, most traders do well. If you look at any of the traders that are actually worth listening to, most of them are not, or all of them are pretty much not over trading. And then of course there's some that are, but if you look at those people's persona, they're trying to carry up this image. So they want to look like they're doing a whole bunch of stuff and people believe it. But yeah, again, to each his own, right? Like everybody got their own way of doing things. But, this is what I've found has been helpful to me. And it's also been extremely helpful to my private community students, which is, at this point why I'm like way behind the things that come to risk, right? The way that we do or manage risk control as traders over here. So, and even in 2 trades, 1 to 2 trades makes sure you take real good. Yeah. So yeah, exactly. That's a good way to look at it. You're giving yourself 2 bullets to be able to operate within. So you're going to make better decisions. You're going to focus on what actually matters. You know what I mean? And you're not going to be so anxious to get into a trade. You're going to limit yourself. So you're forcing yourself because of the rules to pretty much stay in alignment with something that's more professional. It's less damaging to your trading psychology if you take 2 trades and stop, especially if you drop the risk, versus taking 10 trades at 1% because you got excited or something. I wanted to force your will, and then you are down 10%. It's a lot easier to come back because that 10% loss will stick with you for months. It doesn't just go away. So there's more than just like the financial aspect that's being protected by operating risk control like this. It's protecting financial capital, but it's also protecting mental capital. Financial capital can be made back fairly quickly, but you can't even have that opportunity to make it back fairly quickly if your mindset is now totally in the dumps and you're doubting yourself and things are just feeling impossible. When it doesn't have to be that way. You don't have to learn that lesson by blowing your account. And we've all blown our accounts. We've all spun out of control because of us allowing our ambition to get ahead of what's real, and how things should be operated in reality. But if you guys get value from the content, by the way, definitely like the video, share with your friends. If you think conversations like this would be helpful, greatly appreciate it. Tony said, agreed, high quality over chasing. Yeah. And that's the thing. I hope that, some of the continuation perspectives I share, which we'll get into that a little bit today as well. I hope that the opportunities that are shown and just how many opportunities are present on a daily basis, I hope that you start to see that, even if you miss a trade, you don't need to feel like you missed something. Because they're like buses, there'll always be another trade. There's always going to be something else that shows up, So yeah, just I really wanted to make sure that I mentioned this because, of course, this is NFP week. Every time there's a heavy news event coming that generally destroys traders, like NFP, FOMC, and the whole laundry list of like vicious news events, we'll have this conversation just as a reminder. You know what I mean? Because if you don't have risk control, everything you learn doesn't matter. Okay, if you can't protect the assets, you're going to be robbed. And that's part of why this market is even available to everybody, because they know that people don't focus on what we're talking about. They think this is boring. They're like, give me the entry, right? Not knowing that even if you follow a signal service, if you don't know how to have risk control, and you don't have these types of things situated, you're going to overtrade. And then those same people will blame the signal provider when that person probably only took one trade. Maybe it was a loss, maybe it wasn't. But because the student doesn't understand this and they're not being educated by the signal provider for the most part, or anybody else, or maybe they just don't listen, the results are not going to look the way that they had hoped. And then, especially if you're trading on your own, you only have yourself to blame. And even if you take signals, if you take a larger loss because you took extra trades on top of what you were shown, whose fault is that really? It's not the person that sent the signal that may have also taken a loss, right? The loss may be, if you're following them, you're putting your success in their hands, which is not advised. But if you take a larger loss than what was recommended, whose fault is it really? And that's a call for accountability. And most people don't like to hear that. They don't want to do that. It feels uncomfortable to some. But at the end of the day, again, we can't let our ambition get ahead of reality and how things have to operate. We have to operate within a strict set of rules. Those same rules have been created to protect ourselves from certain things taking place. And, we also have to be able to navigate news, specific news events, certain times of the year. And, we have to know the battlefield. We have to understand how to operate within specific scenarios. And we got to plan for them. It's inevitable that we'll take losses, that we'll take losing streaks. It's inevitable. I take them. ICT takes them. You guys take them. Anyone else on social media, whether they want to fake like they don't take any bad days or whatever, they take them, right? Maybe they don't want to show it, but, that's for them and God to have a conversation about, I guess. But, yeah, it's very important to have these things in line. So I hope that the risk control aspect for the days makes sense. 1 to 2 trades a day. First trade, if you take a loss, the next trade has to be dropped by half. If you trade within 3 entries a day, you want to start the first entry a little lower than you normally would. If you risk 1%, drop that first entry to 0.75%, and then drop it by half all the way up to that third trade. So 0.75% in that case would be the max loss. If you take 1% and you want to drop it by half, then you'll pretty much end with a 1.75% loss max on any bad day. And if that was to take place, the next day stays at that dropped risk until you make it back. Okay, very simple framework, right? At least I hope it's simple to understand, because again, this saved me, right? Like 4 years ago, when I was really trying to figure out who I was as a trader, what I wanted to utilize, I was already deep into ICT concepts. This one thing helped me, aside from the technical aspect, which, the biggest thing was market maker buy and sell models. It changed everything. I have a video about that, kind of talking about that as well. But yeah, you'll find what works for you. But again, this has to be non-negotiable. You have to have some kind of risk control. You can't overtrade and over leverage and then learn all of ICT's concepts and think because you learned all the concepts that's going to save you. It won't. It just will not. No matter whose strategy, doesn't matter ICT or not. If you don't have risk control, it's going to be a problem. And you got to fix that quickly. You don't want to let that continue to carry on, because it'll just, the journey becomes longer and longer and longer and longer. And for, most of us, it's hard to adjust that, especially if we built the habit of overtrading and thinking it's okay, because maybe we had a couple times where it worked out beautifully, like doubled our account or some crazy statistic. But it's a false situation. It's a trap, you know, because we're creatures of habit. So something that we continuously do, we start to validate it. And then if we validate something like that, it's, oh man, it's rough. And most people end up hitting that brick wall, refuse to change, refuse to accept that, you know, it's them not making that adjustment that's causing the issue, and then they quit. And then they totally turn off their ability to do this long term, and it's unfortunate, right? So yeah, and then of course, like I mentioned, for the week perspective, if you take 3 days of losses, stop for the week. Okay, so max losing week, you know, less than 3%, right? If you take it depends on where you start as well with the risk, right? If you start the weeks at 0.75%, you know, you'll probably end the week, if you take 3 straight days of losses, still a lot lower than you would if you were taking 1% every trade for 3 straight days, right? That'd be what, especially if you take 6 or like 3 trades every day, that's like what, 9 trades? You'll lose 9% in a week, and that's unacceptable. Totally unacceptable. And it's totally avoidable, because that 9% will screw you for the next week and the next week and probably the next month. And then of course you got to build your confidence back, and it's just not worth participating in. It's not worth having that done to yourself. It's just not. Knowing it's avoidable, you know, simply by operating within these simple rules that we just mentioned. So yeah, I hope that helps you guys that maybe don't have a risk plan or do have a risk plan, and you know, maybe wanted to make some adjustments to make it even more effective for yourself. Okay, and I think there was one other thing I was going to mention. Highlighted. Okay, cool. Good job, Nutty Fafa. So yeah, see, is there anything else? So yeah, we got NFP, like I mentioned, and we have no news on Tuesday. So again, Monday and Tuesday are going to be the days that we observe potential ideas. And then, of course, if we engage any of these, it's going to have to be low risk, right? We understand the environment. It's the start of the month, right? The start of the month, you want to make sure that you are calm, not aggressively pushing things, because thinking of Power 3, okay? Power 3 has manipulation, has consolidation and manipulation at the start of whatever Power 3 you're looking at, whether it's daily, weekly, monthly, it doesn't matter. But with that being said, even if this month ends up being, you know, let's say bearish for the indices, the first start of the month, right, the first week, maybe even some of the second week, may be a little against whatever it is your higher time frame view is going to be, which of course we're going to get into in a minute. So yeah, keep that in mind, and that's part of the reason why the start of the day we relax, start of the week we relax, right? We observe what Power 3 is going to do on that weekly and monthly perspective. And then, of course, on the days, for the daily range, we got to allow for the open to take place. We got to observe the manipulation, observe, you know, how all that ties into the higher time frame view. Okay? So, yeah, I hope that makes sense. So we got the conversation about Monday and Tuesday, and then, of course, be very cautious all the way up until Friday if you must participate. Keeping in mind the risk rules. If you lose 3 in a row, disregard. Okay? If you make any money, okay, just to make this clear as well, if you even make 0.5% on these types of weeks, take it and go to the sideline. It's not a time for you to try to run up your account. You know, some may disagree, and that's fine. But of course, I'm sharing the advice that I've learned over the last, 5-6 years. That's helped me, and helped many other people that I've shared this with. So, do what you will with that information, but I recommend that you really consider applying these perspectives. All right, so that's with the news. Now we'll move on to the more fun stuff. All right. So yeah, we've been talking about this order block since we were over here. I said that if that was going to hold, it would probably drop. We now see this large displacement below this low. We see the swing low violated. We see fair value gap violated. And if we go to the 2-week time frame, we see that this is an order block. Okay, this order block midpoint has now been closed below. So looking at our 3 PDA rule, when it comes to identifying particular changes overall in sentiment, we can see how prices pretty much destroyed all 3 of those PD arrays. So in order for us to even consider the price was going to change and start going bullish again, we're going to have to see some serious displacement to the buy side, disrespecting 3 PD arrays to the buy side. Otherwise, this is probably going to continue and maybe target the lows down here. But again, it's the beginning of the month, so we want to make sure we observe what's going to take place because, things could change. NFP could drastically change things and trigger something that goes totally against what it is we're trying to observe. So if we take a look at some of the liquidity and different things that are in our view, right? We may open, maybe gap to the end of this. Maybe it does that, maybe it doesn't. I think that's a stretch. I think if we are going to go lower, we should start the week across all assets, right? If we look at price on any asset and we think it's going to go lower after a displacement like this, right? The start of the next week should be anticipated to run up a little bit, right? And why is that? It's power 3. You know what I mean? We have to keep that in mind. And that's with every asset, because power 3 is on everything. It's not just in one. It's in everything. And, if you guys have been dealing with ICT concepts for a while, or you've been here for a while, you definitely understand that. So it's very important for price navigation's sake. We have to understand what the characteristics are likely to do and what they normally are likely to do. In power 3, starting every week, you want to keep that in mind, right? So of course you label out your, let me see. You want to make sure you label out your Sundays open and Friday's close, right? So this was Friday's close. I don't drop to the lower time frames on Sundays, but we want to make sure we put that in the right place. All right. So now we got our first step to the new week opening gap, all right? Friday's close. We also see that this is Friday's low. All right. So we also want to take into consideration Friday's high and Friday's low, because at the start of the week, Friday's high and Friday's low are the most near-term liquidity pools, at least from a reasonable higher time frame view. So if it's going to reach for anything, whether it's going to continue to drop these lows, or if price is going to turn around and maybe retrace and come back up into here, right? Because there is a daily fair value gap up there it could reach into, right? If either of those things is going to take place, okay, Friday's high or Friday's low is the very first liquidity pool that needs to be targeted. Otherwise, it's going to just consolidate, right? And damn, it's raining like crazy here. Holy crap, I didn't even know. It's heard hella water dripping on my window. That was weird. It's very interesting. But yeah, so if price is going to do anything at the beginning of the week, doesn't matter what direction you think it's going to go in, these are your first targets for the week. And it never changes. It's always, Friday's high and low are always going to be there unless Friday is no longer a day, right? And that's obviously unrealistic. Okay, so those are the first things you identify. All right, and then of course, like I said, we were on that weekly chart. We do have a little bit of a fair value gap down here. There is a pretty strong break in market structure here. Multiple PD arrays have been violated, and we have a displacement below that low. So I'm going to have to see a lot of evidence, for price to, maybe even come all the way back up above this high here in order for me to, damn, you can hear it? That's wild. You can hear the rain? Yeah, I just heard it out of nowhere. I literally heard it out of nowhere. I'm like, what in the hell's going on? It was just sunny. Like, no clouds. All of a sudden, it's just dumping rain. It's incredible. But yeah, so again, we'd have to see price, at least from this weekly time frame, if we're going to think it's going to come back and start targeting the highs up here, because we see the response off of this order block that supported that idea to go lower. In that case, we were identifying discount, wanting to see one of these levels hold to then kick us back in line if we were going to trust buy side again. Because that didn't take place, right, and it rejected, we see another candle that opened. The midpoint of this wick is highly important, always. Up wicks in a down move, if we return back into them, they act as premium arrays, right, the midpoint. If it can't even close above the midpoint or even reach up there at all, and it stays below it, that's indicative of weakness. And we could see how that has transpired. We talked about this all throughout the delivery here. And I said that if we were to break this low, violate this fair value gap, and break this midpoint of the 2-week order block, that is assuring us that buy side is definitely not what's being favored at the moment. Okay, maybe that changes, maybe it doesn't. But for now, we're going to assume that this is going to continue, possibly target Friday's low, right? That's the first target. It may run up and take out Friday's high to position at the most near-term liquidity. That may happen. That'd be in line with power 3 if we do end up having a bearish week. But then again, we also have the wicks up here too, so we got to keep that in mind as well. And then the levels in this weekly lower range fair value gap, you break those down as well. You have different quadrant levels that connect this dynamic resistance too, to continue to monitor, to just build the support around the idea that price is possibly going to still favor sell side delivery, as it seems to be doing at the current moment, from the even from the previous week, prior to this last week, right? So yeah, that is some of the important levels there. So again, don't forget to mark out Friday's high and low. Think of power 3. And again, the end portion of this fair value gap is available. So we're going to watch that. And if it violates that, of course, it just continues to support the downside targets. Wave equal lows here. You see that? Right here. So that could end up being something to watch if we really ramp through that fair value gap below us. So we're going to keep that in mind. Whoops. You can see it, and once it retests, it's exactly. So we're going to continue to monitor also the response from the midpoint of this fair value gap. And once it delivers outside of this fair value gap, if it retests it and just completely delivers away, that's another great indication that price is going to continue to drop. Like I mentioned, if we're monitoring something going, in this case, bearish, we want to see how premium arrays are respected. We want to see how discount arrays are getting violated. We want to watch the wicks, watch the midpoint of the wicks. All these things help confirm a particular narrative, right? And if price is going to continue to deliver. And if it retraces into wicks like this and it can't even come close to the midpoint, that's a signature that's talked about as a strong indication of one-sided delivery. And it's not favoring the other side. In this case, it would be favoring bearishness and weakness, as we've been seeing price do the last 2 weeks, right? So yeah, that's some trade management as well. Like when you're on the lower time frames in an entry, it's also useful there because price is fractal. Remember, anything you use or operate within on these higher time frames, any of the rules related to how price behaves around different candles in different areas, it can all be translated to the lower time frame for your entry. The 3 PD array rule, the overall wick relationships, how price delivers within those, right? What does it mean if the midpoint stays intact on a large wick, right? All those things are very important. How the premium arrays are either rejecting or getting completely smashed through, right? How in this case the discount arrays are not holding price in a supportive fashion to push price higher, right? All those things are things that should be flickering in your mind in terms of validation and invalidation of whether the move is going to be trusted or not. Once it starts violating that, or any of those aspects get violated, you got to start thinking around like what's taking place. Just because 3 lower time frame PD arrays get violated also, if you're in a sell, for example, doesn't mean that price is going to now be bullish overall. You have to still keep in mind what the higher time frame view is doing, because maybe you took a sell on the 1 minute and you see it now blasting off to the buy side. right? Well, what could be happening? Well, you could be inside of the manipulation of the downtrend on that daily chart. Maybe it's retracing bullish to maybe a daily fair value gap. Maybe you're in too early. Maybe you're entering on a Monday trying to short because it's been bearish or whatever, but it's ramming against you. That's when you have to flip through the higher time frames and see what could price be reaching into. Maybe it's not ready for your short. You see the adjustment in thinking there? If you get something wrong on the lower time frame, you have to go see what's happening on that higher time frame, because you may be right overall in terms of what price is going to do eventually, but you may just be in the wrong time element, right? Maybe it's reaching for something that has to be fulfilled, like maybe a buy side target, like daily fair value gap, equal highs, or something along those lines, to then set you up for the short. Maybe again, a lot of times that'll happen on Mondays and the early portions of the week. Like if you're bearish and you run in on Monday or Tuesday trying to short, disregarding the 3 PD array rule, disregarding power 3 and stuff like that, you'll get caught up in something along those lines. Price will go against you. And a lot of times people don't understand this. They don't know this. They've never been told these things. So they start to doubt their bias, and then they turn around and go bullish, not realizing that buy side delivery inside of that bearish trend could just be the manipulation to a logical PD array, which then delivers into the direction you were identifying. I hope that makes sense, you guys. Hope I didn't confuse y'all. That's a very important piece of information that comes from experience. So what do you do to help you not get early in the trade? Well, that's kind of subjective when it comes to not getting in early. Again, you want to consider power 3. You want to consider what the time element is. A rule, ski mark. One of the rules that I teach and operate, which obviously I learned from ICT over the years, is there's time elements like macros, right? You want to make sure that your entries are at least around those times, like 5 minutes before or 5 minutes after, preferably 5 minutes before or within the macro. If your model's not showing up within there, then you're going to potentially get caught in consolidation or a time where price is just being held. And then, of course, if you trade before the open, there's a high likelihood that you'll get caught up in the manipulation of the daily range because you're trading before the manipulation takes place, which generally happens after the open or at the open, right? So those are some rules that can maybe start helping you identify times where you entered early, but then, maybe later on it went in your direction, right? That's going back to what I was saying earlier about the why behind rules. In terms of the timing elements, the reason we like to take entries 5 minutes before the macros or 5 minutes after or right within the macros, assuming our model was showing at that time, is because of that. The reason why we like to push our entry opportunities after the open is generally because we don't want to get caught in the manipulation. I can trade the pre-manipulation because I'm rooted on the higher time frame. So I won't be fooled if I'm bearish and price does want to run higher, because I have power 3 ingrained in my mind. I have the daily range dynamics ingrained in my mind, meaning before the open, a lot of times things can be manipulative. It doesn't mean you're wrong if you get it or if you take a loss or whatever. It just means that the timing probably wasn't there. Especially if you see price go eventually into the direction. Do you have a video on macros? I know a little bit of. I don't have a specific video about macros. If you'd like me to make a video pertaining to that, I know I do have in my free Discord. I think I have let me go double check real quick. I think I have a section specifically for macros, just identifying the times. If I don't, I can do that. I can add that. Let me see. Do I have one? Let me see. Yeah, so I guess I don't have. Yeah, okay. I appreciate you bringing that up because I have that in my private community, but I don't have it in Guess I'd never put it in the free community. But yeah, if you want, I will put all the macro times in the free community. But then, of course, if you want me to do a video teaching specifically on that, I can cater to what it is that you need, because maybe there's others that have the same issue, and maybe they're more visual and whatnot. So if that's something you'd like me to make to assist you, and I'm sure it'll help others, I will gladly do that. Every single call I do that's live for live trading, I do talk about the macros. But yeah, I can very easily make a video about it, or like I said, I'll put it in after this call in the private community, stating all the different macros. And then depending on when you trade, right, what your specific plan is, like what session you like to specialize in, you can use the macros that are related to that specific time window. I'd appreciate you doing that. What's the link? So the Discord link is always in the link, or the bio of the video down below. So just scroll around and it's down there. You'll be able to see it. Is it true? Thank you for your question, Ski Mark. Appreciate it. Is it true it's every last and first 10 minutes? Yes. Yep. 100%. Every single session, even Asia session, has a macro. The first 10 minutes and the last 10 minutes. So there's a 20-minute window related to these macros. And what's the importance of that? Why are these macros important? Well, if you've ever had to deal with the fact of sitting in consolidation forever, and you get into a trade and you wonder why it's not moving, there's a couple of different factors for that. Maybe overall conditions are consolidated, right, not doing much. That's one scenario. Entering before the open, right? Maybe you're caught in the consolidation manipulation phase of the daily range. And then, of course, maybe you're trading outside of a macro, right? Because macros are made to spool. They push price. Thank you. Well, I appreciate you, Ski Mark. I appreciate you and your support. Definitely means a lot, that's for sure. So thank you for hopping on with us this morning. But yeah, so a lot of people overcomplicate macros. ICT has tucked them in throughout the last 3 years, but he talked about them a lot in the private community and his charter community or whatever. But yeah, the macros are very important. It's just another one of those elements. If you strictly follow those and set a rule around only taking entries near a macro, or macros after the open price of New York, if you trade New York, you start to narrow things down even further, right? There's kill zones, which are 4-hour windows. Then there's macros, right? And then if you're trading indices, there's sessions within that those kill zones, AM and PM session. Within AM and PM session, there's, I believe, 4 macros per session, right? Whether it's the AM session or the PM session, right? Sufi said, it's the last 10 minutes and the first 10 minutes of every hour. And another thing for you to go study as well, Power 3 happens on the 1-hour chart, happens on the 4-hour chart, right? For those 4-hour candles and 1-hour candles, happens on the 15-minute chart, right? So Power 3 is real deep. People skim over that, of how effective Power 3 is. Power 3, market maker models, macros. I mean, these are some things that are drastically detailed, and if you put a lot of time and effort into those, it's pretty amazing what you can come away with in terms of navigation skills. All right. But yeah, so I hope that made sense about the macros and the risk control as well from earlier. Very important things. And then, of course, like we were talking about up here in the chart, the wick response, how price behaves around particular PD arrays. Look, you see this order block here? Notice how, the wick broke through it, but who cares, right? The wick doesn't invalidate something, right? If it closes above it, it's a different story, right? With the body of the candle. But the wicks do the damage. So they are the ability for wicks to break outside of the lines. I mean, it's something you have to accept, right? But overall, we could see that the order block here and the upper portion of this weekly fair value gap, which turned now obviously to an inversion, we could see how the body's stuck right below it, right? And if we measure out, here, watch, let's see if this pops something interesting up. If we measure out the overall gap here, you see this is the 25% here. Isn't it interesting how that also lines up with a old new week opening gap, right? From the new week opening gap is from November of last year. So you can see how new week opening gaps get used for months. You don't have to have them all on your chart, but when price gets close to a particular level, I mean, if you look back just to make sure you see what's there, whether there's something like this taking place, I mean, it's extremely helpful. And then, of course, you couple that with overlapping PD arrays like this fair value gap. You see the 25% level, and you start to build an understanding of why this was so difficult for price to break through it. Right? It's got overlapping PD arrays from new week opening gaps to the 25% of this fair value gap, the weekly one. Just the fair value gap in itself, right? We have this large displacement. We have the bearish order block, right? I believe that there was S&T here between the 30-year, 10-year, and 5-year yields, right? So see all these different factors. And of course, you see the wicks here, right? The wicks are being totally respected. Right, this midpoint of this very large wick, you see that candle couldn't even get to the 25% level. Couldn't even get to the 50% level as well. And that's very important. All of that is indicating weakness in the market. So when you go into the market and you are able to identify these types of things, you're able to start framing out why you should trust something. And you notice there's a key thing that I keep saying, the why behind stuff. I'm a person that needs to know why the hell you're telling me something. I can't just hear, oh, this is this and this does this and you should do it just because that's just the way it is. That doesn't work with me. I need to know why. Otherwise, I can't trust it. Like, why should I trust this? If I can't get an answer for that, I'm not going to use it. And I'm assuming that most traders are like that as well. What is the why? And that's why I'm really, really ramping on the why behind these specific things we've talked about, from risk control to validation and validation, to why particular levels are important, why prices, behaving like this in a particular area. Why can I trust the price is going lower, right? What gives me that evidence, and why can I trust it? These are very important. They were important to me, and I'm assuming they're important to you guys as well. How did that FVG become inversion fair value gap? Price has not completely closed outside the FVG, but another thing is, do we consider its inversion fair value gap as price closed below the? Yeah, that's a good rule, right? If price closes below, we don't know for sure until it breaks away completely out of it. We do have a lot of other supporting factors, from the fact that price broke market structure here from that daily chart. We see that a lot of the upper premium arrays are being respected. We see this first fair value gap here turned into an inversion as well. It just totally slid through it with little to no resistance at all, or support, I should say. And then now we see the response here moving pretty quickly through this other lower weekly fair value gap as well. But of course, again, I mean, there is a likelihood that it could, especially with NFP, right? It could do a bounce, right? It's been very bearish. I wouldn't be surprised if they did run back, maybe try to come back into some type of premium if it is maybe to blow these out, right? Maybe it does do that, maybe it doesn't. But again, we will continue to monitor the midpoint of this weekly fair value gap, because closing below that, I mean, that's a part of the confirmation, but we're not 100% sure until it breaks all the way through. But because it's already done something like that up here, and there's many factors presenting us with the fact that we're overall bearish, I mean, it's pretty trustworthy to believe that this will also, similar to this one up here, turn into an inversion fair value gap. But yeah, the point you just made there, with price closing with the body below the consequent encroachment of this previous fair value gap, that's vitally important. Because if it's going to hold as a bullish fair value gap, it's going to respect the midpoint of that. It's just going to, And if it doesn't, along with all these other factors we've layered on top of it, if it doesn't, then obviously it's going to be trustworthy until proven otherwise. What proves that otherwise? Well, price rallying up back outside above the weekly fair value gap here, right? Again, otherwise it's going to continue, right? We have this bearish fair value gap that's respected. We have this wick here that's being respected, and if price was to violate the high, that order block, and the weekly fair value gap, right, and give that response from there, then obviously we need to wait and see what's going on, because that's showing support, right? That's showing that it's wanting to rally up, maybe to attack some form of premium array like this daily fair value gap. But again, unless that takes place, given what we see here, I would continue to observe the midpoint and this upper portion of the wick, right, along with the order block level here, right? I continue to observe that and see if those levels are going to hold us. Because if they continue to stay intact, we have zero reason, to think it's going to go higher. There's zero reason. Otherwise, well, not otherwise, but unless price was, maybe going to start rejecting off that, in which case we would then look to this daily fair value gap, these buy side liquidity pools up here for a possible retracement, right? The overall narrative doesn't change from bearish to bullish unless we start getting somewhere up here, because look what it did here. It rallied up aggressive, but then still continued to tank. If you look at this time frame, you could have got fooled with price breaking above this high. But if you switch up to the daily somewhat, right? But it's more apparent if you go to the where was that? I think was it the weekly? Yeah, it was the weekly time frame. If you go to the weekly chart, you can see that huge wick I just pointed out was literally just to run up into the daily or the weekly order block. And you see the response. This wick here, I mentioned real time, that this wick here showed me that we're definitely not going higher. There's an interest for it to go lower. And then obviously these were our targets for the last couple weeks. Deja Vu, what's up, brother? Welcome to the call. Appreciate you hopping on. Yeah, if you got questions, let me know. But yeah, I hope you get value from what it is we're doing here. But yeah, so I hope all that makes sense, right? And until we're proven otherwise, we're gonna assume that this midpoint is gonna hold, but we're gonna continue to monitor that. There is a chance for it to want to retrace maybe up into here, thinking of power 3, right? But if obviously that doesn't take place, it's very clear that the next target could potentially be the low portion of this weekly fair value gap that's been left from last week. And then, of course, we got these equal lows down here I mentioned on that 8-hour chart. Right? We got these potential equal lows as a target. You can also make the argument that, you see how this large move went up, took buy side, and the price has, price has shattered this low. Because that took place, we could measure out this high to that low. And let me pull up the extension levels. And we could get some extension levels as well, right? We could see that this target was met in terms of extension. Hope you can see that clear enough. It is a little bit dimmed out. I don't like it to be too bright because, it kind of distracts from other stuff and makes it too busy. But yeah, if you get something like this, like a large move higher, you think it's going to go down, and it violates a low like that, the energetic run before price took out the low here, you take your fib from the high to the low, and you can get some decent fib levels to to frame out potential extensions. You could have made the argument for this one up here as well, right from this high to that low. Once it was violated aggressively, can make the argument with that as well. It's pretty ironic that the 4 standard deviations lines up perfectly with the low right here. Pretty interesting how the extension also reached us specifically down to weekly fair value gaps and the midpoint of this upper fair value gap, which you could see was met pretty beautifully. Look how perfect that 3 standard deviation was. From this high, starting up here to that low, look how perfect that lined up with the previous week's close. right? So you can do that, but then you can also use for this one as well, for this price leg. And then you can also get a couple more extensions as well. Yeah, I hope that makes sense if you guys haven't used that before. It's a way to frame out, like if your extension levels line up with particular PD arrays, it's very, very helpful. Because then you can add that to your list of reasons as far as why, right? Why is this level potentially a good idea to look for, right? And maybe it aligns with equal lows, equal highs, whichever direction you're looking to target. That's just another thing to add on to your list, assisting you in confirmation. Aside from, all the other things we've talked about, from the wicks to the way certain price deliveries taking place at particular levels, 3 PDAs being broken, in this case to the downside. If you look at the upper time frame here, right, we see that big break in market structure. This low breaking, you could have made the argument for that as well. But obviously there was possible reasons, especially with DXY going higher. There was reason for us to believe that this was going to hold and push higher. Clearly that didn't happen, right? So now we got the overall view that price is going to continue to tank, right? And again, unless we're proven otherwise, that's what we're going to continue to operate within, right? What changes that? In my opinion, if this fair value gap up here gets violated and price just ramps up aggressively, then obviously we have to start considering some changes, right, and adjustments, and set sell side aside for a little bit, and then just start to target buy side in a counter trend fashion. Again, and if we're counter trend trading, go back to risk control, we cut it by half, right? Because we're trading against the trend. Especially if we're new, we don't know when it's going to turn around. Right? If you're here in this community and you watch what we do here, we, for the most part, can identify when things are going to turn around and be used as reactionary levels. Right? In this case, right, if it was to run higher against this sell-off, I'd expect this to hold price. And if it didn't hold price, then we would start adjusting our targets to more buy-side targets until proven otherwise. Right? If this was to be violated, obviously that's not very bullish now, is it? I mean, very bearish now, is it? Right? But yeah, so again, we're below this, so that's what we're going to monitor, that midpoint of that fair value gap. And again, Friday's low and Friday's high, those are our first targets to identify. So all these assets that we're going to go over up until the indices, it's going to have to be in our mindset that, power threes to start the week. And then, of course, the most near-term recent liquidity that's probably going to be targeted for the most part, always gets targeted, regardless of where it goes, is going to be Friday's high and Friday's low. Okay? And then again, we have this large wick, so that's going to be in our crosshairs as well. Sell side targets, again, Friday's low. We have the low of this fair value gap, this pink level here, which is equal lows. And then finally, we have the monthly low down here from December of last year. And then below that, let's just take one more look below that. I think there's a 2-week fair value gap. But then if we go to the 3-week, we also can see that there is logical open fair value gap down here as well. So of course, when we start marching towards that, we'll further consider. But for now, right, the targets I just mentioned, the low of this fair value gap, Friday's high and low, these equal lows, and then the end of the low down here, that's our overall target. And then if price wants to respond, get above, and start targeting some buy side in some capacity, Friday's high is here, right? So that's the first target. And then if it goes beyond that, we want to see the daily fair value gap potentially get utilized. And then if that's violated, then obviously we disregard any type of short ideas, right? But we can trade both sides, right, within the context of this going down and make sense of it and not be flip-flopping and all that. Sometimes you got to adjust if you want to take part in a retracement, but then once that retracement takes place, if you understand how price delivers from, external range liquidity, then what it does if it retraces in terms of power 3, right? Maybe it seeks internal, right? If it responds from something like this, then that tells you can get back in line. And the timing element in terms of when this higher time frame is going to deliver would now be in alignment, right? Especially because it's been so bearish, I wouldn't put it past them for them to want to run up here and maybe hit this logically, then use that as a potential area to pair smart money shorts to then, maybe come back to Friday's low, right? And then, these other lows, so on and so forth, right? So yeah, I hope all that makes sense, you guys. So again, we spend a lot of time here on this chart and on the bonds because these dictate where the DXY is going to go. It also dictates, in this case, for the bond market, it generally dictates what the indices will do. It's kind of been a shit show, okay, to be frank. Things have been kind of cracked in correlation overall, but that's just because there's a whole lot of stuff going on, right? There's a lot of movement, a lot of things taking place on the back end in terms of geopolitical events. So, it'll get back in alignment. It doesn't always forever stay out of alignment. And once it does get back into alignment, right, we're here to take full advantage of it. But yeah, I hope the yields analysis made sense and all the different levels I'm identifying that, in my opinion, are going to be used and important. So we'll now move on to the bonds. Okay, so let's take some of this off real quick. So start from the monthly real quick, see what's going on. So we can see there's this SMT at the low here. Right, so the 5-year has made a higher low. The 30-year made a lower low. Okay, so now we see a response off of that in relation to this monthly time frame. So this big retracement, we're going to have to see what takes place, right? If this continues, the next logical target, if this is the only time frame we're looking at, right, would be the high up here, the wick. And then beyond that, obviously, we have the fair value gap up here. Right? Remember, this going higher would support us seeing the indices go higher. So if that was to take place, right, then, that means to us that there may be in the near future a turnaround in the indices, maybe set some type of low, seasonal low, to then try to run a bit higher. But again, if that doesn't show in the indices, we're going to continue to trust what it's doing right now. And in this case, right, it's been pretty aggressive to the downside. We'll talk about the indices in a little bit. But yeah, so that's what we see here in this market, right? The SMT that led to price running higher. And then we, of course, got this near-term target up here if it is going to continue, right? But we're going to have to see next week if that is the case. So let's drop down to the weekly. Right, so again, we could see how these highs here are potentially available. If we zoom in, right, there's a little bit of a gap up here, right? Seems as though that's what they are trying to target. We have a fair value gap in here that's possibly going to act as an inversion. So we're going to want to keep that in mind. Here, let me clean this up a little bit. We see this too, this 2-week bearish order block. The midpoint has been violated. So again, that's all indicating to me that we're likely to reach up to this high. Whatever happens at this high, obviously, we'll be able to adjust to, whether it gives a huge decline off of that. I mean, we're way too close because now we've set equal highs up here. So I'm fairly confident next week the price is going to reach up to this. So again, you see the other market, right? We're talking about price continuing to drop. Well, we're looking at the bonds now, which do the opposite, and it seems like they're looking to want to rise, right? It seems logical for them to want to take out this buy side. And even if they were to then try to decline off that, right, and maybe end up turning around entirely, we'll be able to see that and adjust to that if that takes place. But for now, going into next week, this is the most near-term target here, right? At least from this weekly view. Again, we open up next week. I wouldn't be surprised if there's some type of retracement, right? We also see, again, this weekly fair value gap. It could reach into that, maybe use that as the launching point. So that's obviously one scenario. But as far as what we see here, again, we got to think of power of three, right? So the week opens. If this is going to go higher, I would like to expect to see price pull back in some capacity. And then once that takes place at a logical level, right? Say it's this weekly fair value gap that it reaches down into. That is the level I would anticipate for price to continue to go higher, to then target the equal highs up here and then finish off a bit of this fair value gap that's still available to us. We want to continue also in that same sense, observe the response between all three of them, right? Is one going to fail and create an SMT? And then off that SMT, do we eventually see a strong displacement that maybe gets us back below this weekly fair value gap? Because that would be indicating that we're not as bullish anymore, right? So, yeah, of course, until that takes place, right, we're going to continue to observe the highs up here possibly being targeted. And then if it gets above that, we'll see how price behaves. Notice how, price swept higher time frame levels here, and we've aggressively retraced back through it. We couldn't stay below it. Same with this, right? Whipped through it and could not stay below it very long. So we'll see if that takes place up here as well once we fulfill this upper target up here. Looking at things from this time frame, you could see how that's the logical view. And then if price was to decline, what's the other logical view if this was the only time frame we're looking at? These lows. These are all weekly lows. So those are big, huge liquidity pools. All right, so we don't want to make bias and narrative overly complicated. All right, where's the most near-term logical level? Looking at it from this view, we got these highs up here. If price is going to turn around and try to target, say, something further down to the downside, it has to break through this weekly low, right? Because it's a weekly candle. So that, again, from this time frame, if this is the only thing we're looking at, this is our downside target. But again, the likelihood of it getting down there, given what we've seen, is unlikely unless some type of liquidity is now taken and we start to see some type of response. Because we've now violated multiple PD arrays here. There was that 2-week order block I mentioned. So it violated the midpoint of that as well. And then, of course, it swept these highs. So that's multiple PD arrays. So there's no reason for us to push shorts, even though it was dropping. So this perspective I'm sharing here is universal. It goes to all the different assets we observe. So it's just some of the thought process as far as identification of liquidity. And, of course, that's aside from previous months' highs and lows, previous weeks' highs and lows, previous days' highs and lows. And in this case, it'd be Friday's high and low that's important because we're starting the week. And then, of course, in the lower time frames, there's new week opening gaps, new day opening gaps, regular trading hours gaps, previous session highs and lows, so on and so forth. Those are all static liquidity pools. They don't change. Now, depending on where we're at and what is in the chart at that time, right, that'll allow you to select which one is more likely to be targeted and used as a target. Because a London's high and low, for the most part, will be taken if we're going to attack a previous day's high, right? Maybe it sweeps both of them. Sometimes it'll just sweep the high and then just continue to run higher for targeting a previous day's high. So there's different scenarios around using them, which I'll probably get deeper into. I don't want to confuse y'all. But as far as identifying, at least for this asset right now, this time frame, and then, of course, the tactic when we go to these other assets, what's the most near term, right? Where's the most logical, easy to attack level if we're looking at price here, right? What has it been doing? Where did we come from? And what was responding? Has anything been disrespected to the upside in terms of 3 PD arrays? We see that it has, right? We see that the bullish order block has supported price and given us a huge response, right? And then we look at the most near-term high, that being, the weekly high first, Friday's high first, and then, of course, beyond that, fair value gap and the high up here. And then since this is correlated, obviously, very similar aspects across the board, right? And then, of course, let's go to the daily before we get to the DXY. So again, I wouldn't be surprised if price opens up here, drops down, gets into this weekly fair value gap, We also have the daily fair value gap down here that would be logical too. We'll see if that gets targeted in the view of power 3. If we are going to continue going higher, I'd like to see that. But if it was to drop down a little bit, not even be able to break through this bullish order block, then obviously that's showing us real strength that we could trust and get behind. And so that would just continue to support us going higher. We also see now this here, right? We have this daily fair value gap above this high. So that's a pretty good indication, right? If price does get up here even closer, that's a very logical target aside from just this high. A high or low paired with a PD array right next to it, like in this case, the high paired with the fair value gap, that's a very strong level of, that magnetizes price. It'll pull it to that direction. It's like a treasure, like an X, right? X marks the spot, like a treasure map. If you get the narrative right, if you think it's going to continue going higher, PD arrays are respecting, in this case, the bullish delivery. We see things turning from bearish PD arrays like this weekly fair value gap to inverted bullish PD arrays. It just continues to support. And then say down wicks, right? If price trades down into a large wick, supports the midpoint. All those things assist us in trusting price coming up and attacking, in this case, this particular level. All right, again, all those different characteristics while price is delivering are useful across the board on every time frame, whether you're on an entry time frame or these higher time frame viewpoints. Right? It's all relative. And then of course those lower time frames have to be confirming or showing respect to something that's taking place on that higher time frame view. All right? So yeah, I'm ramping or rehashing a lot of the same things over and over to make it so it's highlighted. I know that I needed that when I was learning, because I'd hear all these other things and gloss over important facts and miss things, right? So yeah, that is my assumption and different views as far as levels that are important. What I think could take place, again, if we're bullish on any market, we want to see the week start with a decline to then continue and decline into some form of a PD array that can support price, or some form of a liquidity pool where losers can be engineered, so then we can see that get violated and start to run in our direction as the week progresses for power 3. And then all these other things help support the ideas we're trying to solidify. All right, so hope that makes sense for the bonds. All right, now we'll go into the currencies, and then of course we'll get to the DXY and then the indices and put a ribbon on it. All right, so let's start from the monthly time frame. All right, we see that price has retraced into this large down wick. So we're definitely going to want to monitor how that midpoint is going to be respected, right? This is the monthly time frame, obviously. So price has ran aggressively above previous month's high from January. Now we have a previous month's high here for February, because now we're in March. So what we're going to do here, actually let me remove, just start fresh on this one. Whoops. So this is going back to what we did the other week, if you don't remember. And, based on the list I just mentioned, right, previous month's high and low, previous week's high and low, previous day high and low, so on and so forth. This is how we're going to start, right? Where do we come from, right? We came from these lows. We see the respect of this down wick here. The midpoint of that was respected, so that supports the fact that this month previously was bullish. So what is it reaching for? It's been very bearish. Where do we come from? We came from this wick here. After this wick ran out some of the liquidity in this low, we did set relative equal lows here, so that's very interesting. But then we look at the other one, right? We look at the euro versus GBP. There was an SMT at the low there too. We see that there's also an SMT above this high and this high, right? So it's a higher high, and we see a lower high. So there's a crack in correlation there in a trend that's been pretty much going to the downside. So we want to definitely consider that. We want to identify the previous month's high here. And then we want to map out previous month's low. If I could find it. All right, I'll just put it up there. Whoops. Previous month's high. Previous month's low. All right. So we know where we came from. We know where we have ended up. Right. We got this midpoint of the wick here. So we want to continue to observe the response from there. Okay. So we take that information. Well, first let's just make sure we place that there real quick so we don't lose sight of it. All right. Where is the thing? So now let's drop down. Let me erase this fib real quick. So you see the response, right? We hit that midpoint of that large monthly wick. Okay, you see the response off of it. Okay, now we've gotten some type of decline here. Okay, so what is price doing, right? We took out buy side, price is now retracing. Okay, we see the euro doing whatever the hell it wants to do. Okay, but we see this response down below, we see the volume imbalance, we see the fair value gap. So we want to see, is price going to open up and just start smashing below this? Or is this going to then change to price going higher? If we get a response from here that aggressively races towards buy side liquidity, the first target, again, is going to be Friday's high. Okay, so if we just drop down quickly to here, right? The near term, most recent liquidity is this high here. Okay, so if we sweep out this low here, right, as we have done over here as well, and we start to aggressively race higher, okay, we got relative equal highs here. We have, I mean, I guess you can classify this as relative equal highs, but aside from that, we have the previous month's high. This previous month's high is also last week's high. So those, sometimes they overlap, right? Monthly highs, monthly lows, weekly highs, weekly lows, sometimes previous day's high and lows as well. Like for example, this here is a weekly low as well, but it's also Friday's low. So sometimes things overlap. So it's, you know, pretty important fact as well. But if we get a response from here that ends up going higher, same with this, then obviously if we start blasting through this monthly wick consequent encroachment, or just midpoint, whatever the hell you want to call it, then obviously that'll start to continue to support us going higher, especially if we see DXY drop. But DXY is not dropping just yet, right? It is coming into a particular level we're going to talk about in a minute. But we'll be able to support whatever idea as the week progresses next week. Again, next week is the start of the month. So first week of the month, we got to set the stage for what the rest of the month's going to do. But these are just obviously some of the most important levels going into next week, so we can be prepared to possibly find some type of engagement on Monday and Tuesday. All right, so again, we want to watch how this is going to behave. We want to see if DXY is going to continue to go higher, if we at some point in time see the yields start to rally, and the bonds that maybe they want to, maybe next week and the week after that ends up digging lower because maybe they want to give some type of downside delivery, right? That'll support this looking to continue racing lower. Same with the euro and the indices, right? But if we see the yields continue to smash lower and the bonds continue to run higher and they don't even want to retrace, that may trigger this into having some interest to the buy side. Same with the indices, okay? But as of right now, none of that is in alignment in terms of overall market sentiment or risk on, risk off behavior. So there's some disjointed behaviors going on. But as a whole, right, obviously we can do analysis on these individual assets and figure out what they're potentially likely to do. Maybe you trade currencies. right? Maybe you trade the bonds, right? I know a couple people that trade the bonds and yields, but we, right, at least myself, I use bonds and yields to justify, and all these markets I use to justify particular ideas. Obviously, it's not every moment in the market where things are going to be in full alignment across the board with overall assets. But, it doesn't stop you from taking trades. It just means, again, going back to risk control, when things are lacking symmetry, you want to make sure your risk is lower. My risk has not breached 1% this previous month, and in January either, right? But that doesn't stop us from having some pretty phenomenal weeks and months, but it does limit the downside. And then, of course, if we're following the risk rules we talked about early in the video, we set ourselves up for safety, and then long-term longevity. But yeah, so we're going to have to continue to see, right? We've shifted market structure here. We've came off the high. The new month is going to start right as the open comes today. So we're going to see how that is going to behave. We have responded off this monthly wick, like I mentioned a second ago. So we want to see how that's going to continue. If it just starts blowing past that, again, we have Friday's high to watch. We have justification between this fair value gap and just the response above the high here. So that could be kind of interesting if it gets above the wick consequent encroachment I mentioned. If it does start to continue to rage towards that, and we can continue to justify price doesn't want to go lower by watching the PD arrays and watching the wicks, right, seeing how the downside wicks are behaving, maybe they're holding price to go higher, then again that starts building interest in us trying to target further buy side targets, right? We have this high here, we have previous day's high here from Thursday. So Thursday and Friday's high are the two closest buy side targets for the coming week, right? This decline here, we want to see if that's going to trigger that, right? If it's just reaching down for a retracement, or is it just going to overall, look to decline as a whole? I'm not going to be fully bearish on this market unless we continue to violate the downside here, because now we've gotten below this monthly wick consequent encroachment. So you could see it's acting as resistance. We have this up candle here. Could use that as a potential order block. Maybe we have this one here actually we could use. It's the highest one. So we could use the low of that as a potential area. We observe to see if it's going to hold. So it's this area here. I want to see if there's like a breaker of some kind, but there's not. It's very, very it's very much more clear if we're looking at the 2-day order block level. And then, of course, we get the volume imbalance. So if price ends up violating down here, let me see this right here. If it violates this low, doesn't look like it wants to come back to this level up here. And then, so we have a volume imbalance, swing low. And we also have this bullish order block that's already been violated. And then, of course, we have fair value gaps down here as well. Look over here, we see inversion fair value gap. You could take that and drag it over as well as a possible area to watch. If it continues to respect all that and just starts favoring downside, then obviously we're potentially going to reach into this. I wouldn't be surprised if we reach down to there, then use that as a level of response back to the buy side. Now, again, if we lose this, we're entirely not favoring any type of buy side delivery anymore, because that's multiple PD arrays and price has proven itself. Then we can reasonably trust the fact that, maybe we're going to reach down and target these levels over here. And then, of course, if we see the bonds and yields start to support that, then, there's even more power to our downside interest. But if we see price respond here and just start aggressively ramping above the weekly wick here, starts really responding off these levels here as support, then again, our target is potentially going to be Friday's high before it even gets up into any of these other levels. Then we have, after Friday's high, we have Thursday's high. Then we have this large wick up here. Notice how the wick behaved on Thursday. It couldn't even get to the midpoint of the wick. And then it triggered a drop. We got down below the low here. So that resulted in Friday's candle being bearish as well. Right? So you can see how all this stuff starts to align and paint a picture for you. We've talked about a lot today, as we generally do. but all these different elements, you hear them over and over, and if you apply them, things start to be a lot more clear. That's the point, right? Clarity is the point in this community, and the things that we talk about, like these overall weekly calls, especially in the live calls for live trading. You get to see behind the veil as far as my thought process in the moment. You get to see when I'm uneasy about something. You get to see when I'm confident. You get to see when it delivers. You get to see when it doesn't deliver. How I behave in the good times, how I behave in the bad times. So, you can kind of use some of the ways that I operate mentally and technically, see if there's things you can take and implement into your own trading, maybe help you improve in some ways or another, right? So yeah, it's kind of like what we see here in the Euro and GBP. Again, we can identify this volume imbalance in here. All right, so let me put the daily volume imbalance, and then of course, aside from that, we have it's kind of disjointed there, but we could just use the overall gap area, and then now we have this daily fair value gap as well. So we're going to see how this volume imbalance holds as well, like I mentioned. So we got multiple swing lows that have been violated. This second lower one has not been fully closed below. So we'll see if that's just a purge below it to then continue to trigger higher. We do see these equal highs up here. Prices rejected off that. So we have an inversion for value gap here. And then again, we'll see what the behavior is going to be below this low. Notice here as well, right? Once you see this, you can't unsee it with the wicks, right? If you're favoring something going in a particular direction, study how they behave. Look how perfect the delivery was to that midpoint of that down wick in a downtrend. It just beautifully operates, and it just continues to support whatever it is you're trying to do. In this case, if you were favoring downside, if you watch that and you have this on your chart, you're able to see it as a dynamic resistance level. And if it supports that, right, say it rejects like it did here, then you're just adding to the ability to trust the move going lower. Now, if it turns around and violates it, then think about it. You're adjusting, right? In the moment, you have so many things that can be helping you justify or invalidate a particular idea. And then, of course, if your risk control has framework like we talked about today, I mean, you're already building trust behind the fact that, you have nothing to fear. And if you're in the market operating within these things that we go over and some of the things you pick up from ICT himself, you start to really realize you have nothing to fear. So when you take a trade, there's no reason to be scared. You have a stop loss in, you have your risk amount that you're willing to take, you have your limits on how much you're willing to lose. You have different scenarios and different ways of viewing things technically that help justify or invalidate whether a particular idea is going to happen over another. And then if those invalidation levels are violated, you now know that you can adjust and start to think about things in the other direction, and then start layering your validation and validation levels for that new sentiment you've derived at, right? So it's a very structured, systematic way of doing things. We're not thinking, it's higher highs and higher lows, so I hope it goes higher or I hope it goes low. No, there's things telling you whether it's going to do it or not. I mean, who wants to trade thinking everything's random or guessing on every single event with like no trust or systematized way to validate whether something should happen over another in terms of probabilities? It makes it less stressful when you have a system that's organized from risk to targeting to overall analysis, what justifies one thing or another. And again, that's like the main focus of this channel and anything I post on social media, or psychological assistance, right? Things that help you think properly about certain things, set expectations properly, so on and so forth. So yeah, we'll see how this behaves, right? I wouldn't be surprised, obviously, if this is going to be bearish. I wouldn't be surprised if they open up or trace back a little bit, and then maybe use some of these levels as resistance to then maybe dig lower a bit into here. If this continues to support price and we get a displacement to the buy side, that allows us to then start to trust certain things that are going to take place to the buy side. Again, it's NFP week, so you want to make sure that you don't hold on to things too strongly, because anything can change at any moment. But again, all these things that we've talked about so far, I hope have painted a pretty solid picture as far as what each of these assets are going to do potentially, and then what invalidates and validates particular ideas. Again, if there's any questions, let me know. But otherwise, this is all I'm going to keep on this chart. These are the futures currency contracts. So they have new week opening gaps and new day opening gaps and all the similar things that indices have. So, whether you have access to this data or not, obviously is subjective. But regardless, the overall view of things, maybe the price levels will be different. But if you look at the CFDs, if you can identify them looking very similar, maybe there's some stuff that looks or that is in the same spot. Hopefully the analysis overlaps with that if you do have the currencies with CFDs. And if it does overlap, then obviously you can see what our overall sentiment is. I don't think it would be too different. It may look a little different because the data streams are a little bit off when it comes to currencies from broker to broker. They all have their own data. But the overall idea in terms of sentiment, it's going to be pretty much the same, right? And again, a very simplistic way to view targeting, just so we could put a ribbon on that as well. It's always going to be, or you have to always have previous month's high and low, previous week's high and low, previous day's high and low, all mapped out. And then on a Monday or on a Sunday, if you're doing your analysis, you want to go back and look at what Friday's high and low did. Mark those off, because if anything is going to be targeted, if this fair value gap is going to be targeted, if these highs are going to be targeted, whichever one it chooses to attack, Friday's low is going to be the lower target first. Right? It's going to have to trigger that in some form or fashion if it's going to go lower. Or the Friday's high, if we're going to go higher, it's going to have to trigger that if it's going to go higher. Very simplistic way to identify reliable, continuous, repetitive liquidity. And then, of course, like I mentioned, previous month's high and low, previous week's high and low, previous day high and low, those are always going to be in the chart. So looking at the chart, if there's one of those or multiples of those that are close, then obviously you have a way to start framing an idea towards that particular direction. And then, of course, if you can add on PD arrays that are next to those levels, you could start to see how things snowball into more clarity and what targets are, what targets you're able to then start to frame ideas around, whether it's, Sunday or Thursday, these things will still be there. And then on the lower time frame, again, you have new week opening gaps, new day opening gaps, regular trading hours gaps, previous session highs and lows, and, so on and so forth. And then, of course, you got to observe equal highs and lows on every time frame you look at specific to those time frames. So those are all generally repeatable targets. It's not random. It's, there's logical, repeatable things that you could frame setups around. And what I just mentioned, those levels that I've pointed out, they're a testament to the fact that you'll always have something to make a framework around if you have a model and if you have your risk control on lock, right? Like you have that plan for. And then, of course, Power 3 also meshes in, and, when we get into the different models and stuff like that, which is subjective, obviously. Power 3 is not. That's across the board, whatever you choose to operate within. But you can start to see that, you could start laying the framework and foundation to something that can be repeatable, something that's trustworthy. And then you study it and you see how consistent, things get targeted and how certain levels get targeted in different scenarios more than others. But again, just to, come back to this, we've been really bullish. It looks like it's in a form of retracement. If we look at the weekly chart, it literally looks like it's just a retracement. A different story with the euro. I mean, this just looks like a mess. It's very indecisive, doesn't know what the hell it's doing. So this is very low probability. One thing too, before we move on, when you see prices doing this, overlapping on the higher time frame, multiple overlapping candles, automatically when you go into the week or into the day where you observe this, low probability. There's no interest for it to want to go anywhere. It's overlapping back and forth, creating multiple overlapping gaps. many overlapping weekly and daily candles, unless you're really good at day trading on the intraday charts and you don't use the higher time frame, which, I mean, some people do that, and you're really focused on being a scalper, and you know we're in low probability and you could take more losses than you want, then if you choose to engage knowing all those red flags are there, so be it. But if you want to limit your losses, if you want to make sure that you can identify or have a tool to identify simply a higher probability versus a lower probability condition, seeing something like this automatically puts you in low probability. If you see things are not symmetrical, right? Things aren't doing what they're supposed to do in terms of risk on, risk off. Like, for example, DXY is going higher, so the currency should go lower, for example. If that's not taking place and they're all scattered around doing whatever the hell they want, one's consolidating, one's going higher, one's going lower, that's, again, a signal of low probability, right? It's going to trigger in, harder conditions. And then, of course, if it's at the beginning of a month, at the end of a month, on a week of NFP or FOMC, or any of the other red folders that are insane, like Fed speeches, rate announcements, so on and so forth, those are all scenarios where there's reasonable anticipation of a low probability condition. So again, that goes back to when to trade, when not to trade. So you have to subjectively make that decision and operate however you want to operate. But of course, we are trying to figure out the highest probability, the cleanest delivery, which we're not always going to have a chance to engage in or call before the fact. But we want to be able to know the signatures. We want to know, on top of the liquidity identification I just mentioned, that list. It's literally a list. If you go back and make a list of that and then go into the chart every day identifying these levels and studying them, you'll open up a crazy world for yourself. It's truly amazing to see how repetitive this stuff can be, and how reliable your analysis can become if you know what you're looking for. And a lot of times in that list of liquidity pools, I mentioned, plus, of course, adding on different PD arrays. If you see any of them in close proximity, then you can use those as well to frame on top of those liquidity recommendations I just mentioned. So again, it just adds to the fact that you'll always have something to frame a narrative off of, and also invalidate and validate, right? Because I've been talking about invalidation, validation too. So I've given a bunch of components just in the last 3 weeks of calls we've done. And, those that have been applying them and putting them in their own trading and studying it, you see how you can really start to get systematized, and it starts to become more fun. And your stress goes down, and you start to think, okay, I have some repetitive things I can operate within. So I hope that you guys find that that revelation through the things that we're talking about, and of course your own studies as well. But I hope this is kind of narrowing your focus, and of course timing, right? We got macros and all these different things we talk about as well. I'm not going to get too deep into them right now. But again, that's another element that we've talked about that really shrinks your point of view, like your focus on, like a sniper fixing the scope, right? Trying to zoom in closer and get a more accurate shot. Each element that we talk about, from the liquidity targeting to risk control to different higher time frame analysis, risk on, risk off behaviors, identifying higher probability versus low probability, when to trade, when not to trade, when are more risky environments, and how should you operate? How do you operate around the news events, right? These are all skill sets, and of course there's more. There's so much more to line up, right? But these things we've talked about are so. It's so much, like, it's so clarity building, and I hope you guys are finding that. I know some of you already have and voiced it to me, and I'm extremely grateful you've listened, because I wish someone would make it simple, right, and just start organizing it so I can have a framework to organize around and find myself in. And okay, appreciate you, Eddie. But yeah, like Nutty Fafa, I know you've been applying everything. You've been hitting me up all the time, and people like Tony too. You guys have been telling me that it's been really eye-opening and changing your perspective, and I'm grateful for that, because I know how hard it is. I know how vicious the downside can be if we don't have guardrails or perspectives that have been there to show us what's ahead, show us what could come and how we can anticipate certain things taking place and how to operate within, certain hardships that we face. And, that's why I focus on certain things like risk and psychological stuff. And now every call for the last 2 years on YouTube has been specifically daily bias and narrative. All my titles and stuff, I mention daily bias pretty much all the time because all these different things I talk about are forming your mindset and zoning in your scope as far as how you can consistently, repetitively look at daily bias, weekly bias, and overall the tactics we employ there can also be expanded to monthly bias, right? And then the importance of things like Power 3 and all these other subjects, including liquidity and stuff that we talked about a minute ago, right? So yeah, and then again, just to add another thing, I think I mentioned it before, and I kind of just mentioned it too, but when things are overlapping like this, it's automatic that your mind goes to low probability. I don't care what you see on the 5-minute. It doesn't mean you can't trade within there. The whole point in identifying whether it's high probability or low probability, at least for me, the importance of that is so I can understand how to navigate my risk. What should my risk be? Should I go in there having my normal risk exposure? Or are there bullets flying? And do I need to start putting on some armor and relaxing a little bit and being more selective as far as how I operate? When I'm able to identify, okay, this is probably low probability because there's cracks in correlation. There's lots of crap going on in the world, right, in terms of geopolitical stuff that impacts the economy. If I see that things are overlapping like this, if I see that we're before a news event, right, if I see that the overall higher time frame is consolidating across the board, if the bonds and yields are not agreeing with certain things, again, that doesn't make me fearful. It doesn't make me not go in and engage or try to frame stuff. I go in there and do it. Every day, I haven't taken a day off in trading for, the last 5 years. It doesn't mean I trade every day, but I go in there and look at it because you build the reps, even if it's 30 minutes, So it's extremely important, because you can't get good at something if you're not consistent, right? If you can't have consistent results if you're overall not consistent with your process. And, if you don't have a consistent way of viewing things, like organized ways of doing things, and like your risk isn't continuously adjusted and, or not adjusted, but if your risk is not organized, right? If you don't understand that there's different moments for different ways of operating, like your risk should be a certain amount in certain conditions versus another. Like if you don't have these different elements, how can I validate, invalidate? It's really hard to have consistent, reliable, trustworthy results. It's really hard, especially if you're trying to do 1,000 models at once. Again, I mentioned it before, but how are you supposed to get consistent results if you're not having consistent processes? Nobody goes to their job and does 100 different things when they have one job to do. Like if you did that, you'd get fired. So think about it. If you were a trader working for a firm, would you fire yourself for the things that you do? I mean, if someone's inconsistent with their process and trying to do anything outside of the firm's way of doing things, like that you're getting paid to apply, you're going to get fired. You incorporated, So if you can't consistently do consistent things that you're telling yourself to do, you're not going to get consistent results. If you can't solidify one model and operate within that one model, how are you going to operate navigating multiple? Again, these are things that I mention a lot. Most people don't because they're trying to cater to the ones that want signals and all these other things. But that's the thing. I mention it all the time too. It's like you're not going to have the right mindset if that's all you focus on. And all these things that we talk about get you to that point. So you can trust yourself, not trust in only me or whoever else. The whole point is for you to trust you. And the only way you trust you is if you build processes and understand the right ways of doing things. I don't have all the answers, but I do have what works for me, and all the things that have worked for certain other students that have come to me for advice. I'm not perfect, and guess what? You won't be perfect. Anyone that claims they are perfect, you should block them. Okay? I don't care what kind of Lambo they try to rent and show you. I don't care. Okay? It is what it is. They're probably not even consistent in their processes. And they show the Lambo, and that's pretty much it. Do you have a video? I'm probably gonna butcher your name, Drijesh. I think I said that right. Appreciate your question. Hey, this is good knowledge. Do you have video content for complete beginners? A lot of stuff I'm unable to understand here. I don't have any basic videos. Are you new to ICT concepts? You probably just stumbled across ICT's content. Yeah, I'd say if you're really, really new to trading in general. Okay, so if you're really, really new, I would recommend that you go onto YouTube, type in man, that's an interesting question. Because many people would say go to the basics of trading, which obviously you probably want to know what a broker is, you want to know lot sizes, you want to understand certain things like that. You want to understand the chart, trading view, because that's a thing you're going to have to really, really get comfortable with. Because it's a tool, obviously, you need to be able to use it. Then, of course, there's a lot of the things like risk control that I was talking about earlier. That's a basic thing. And then, of course, you should focus on how to manage risk right now, even if you haven't even taken a demo trade. Because, again, if you don't have a risk process in place, nothing you learn is going to matter. So that's a lesson. If you can learn that right now, and if you can take to heart that over trading and over leveraging will never be the answer, so you shouldn't even do that in practice, those will serve you extremely well in the future. I'm really grateful that you've came or stumbled across my channel and you're so new. That's amazing. I wish I stumbled across someone like me or someone like ICT when I was first starting. I've been trading for almost 6 years now. And I've been through a lot, to say the least. It's been a journey, that's for sure. But yeah, it's pretty insane. But as far as where you should focus, I want you to, of course, dig into the basics of trading logic, obviously, right? Like the basics, like what's a candlestick? Somewhere you could start is, if you go to ICT's channel, start with the ICT 2022 model. You can also dig into ICT's 2016 mentorship stuff. And then, of course, that's on his YouTube channel for free, by the way. It's a whole course that I personally paid a lot of money for. But it's free now, so you might as well take advantage of it. But if you start there, you'll learn a lot of the basics of the overall lingo, right? Like the words that are used. And it may not click at first, which is totally normal. It's the way it is for everybody. But if you stay patient and just focus on, maybe 3 months from now versus like next week, or maybe a year from now, it'll be extremely helpful. I saw your thumbnail suddenly and thought, let me see what's going on. You should post more content. Do you have Instagram? Yeah, I have an Instagram. It's the same. It's the same exact. Oh man, why am I blanking right here? The same exact handle, right? The same name. I don't know what the hell I was thinking right now. But yeah, just if you type in WMG Trading on Instagram, it'll pop up. As far as posting more content, yeah, I've been getting that a lot. I probably should. I'll probably take that advice. But yeah, I want to make sure that I tell you where to go, because you can stumble across a lot of idiots, and you'll pay the price. And you don't have to. I was mentioning that earlier today in this call, that you don't got to pay the price to learn some of these basic things, like different lessons. So yeah, just go to, if you're going to start, if you're just starting, for anybody that's just starting, start with ICT's, his course, 2016. You're going to want to, that's part of the playlist, by the way, 2016. You want to definitely dig into, obviously the basics. What's a broker? All right, what's a candlestick? Instead of looking up what's a candlestick entirely, just like in the basics of what traditional people try to say, you want to look up the term power three. You want to dig into, I mean, I have a lesson about power three, a whole boot camp, I believe, on power three here on this channel. But I don't know if it'll be too advanced. I don't think so. It may be if you don't know much of the lingo, but maybe you could dig into that. Maybe just look up a couple more as well, right? Dig into the main thing is a lingo, because it's a language. The way that smart money concepts is, it's a language. It's not traditional to what everybody else sees in the markets. So if you can get yourself to be on that side of the fence first and foremost, without being tainted by social media and all these other people's perspectives that are based on randomness. The markets aren't random at all. Like, everything's controlled from the seconds chart. So there's a rhyme and reason why things take place, and it's because things are digitally delivered off algorithms. Oh yeah. Yeah, see, this is one of the reasons why I started this channel, was because I felt that same thing. Most people don't appreciate the views and attention that people give them. Maybe their ego gets to their head and all that, but their goal was probably much different than my goal. My goal is to help people sincerely. I'm not here to become some crazy influencer. If that takes place, so be it. I'm not willing to give false narratives. I'm not here to give fake information just to get attention. I could care less. I don't need to be on social media. But because I want to help people, and I know that this industry is tainted with a bunch of idiots. Like, it's so sad. Trading has completely revolutionized my life. I don't have a job. I don't have to do any of these things because of trading. And it was very far-fetched. I never knew anything about investing. I don't have anyone that invests in my family. I have no rich people in my family. I have nobody that owns businesses. I have no options in terms of trying to learn financial literacy aside from school, and they don't teach us anything. They want us to be broke. I have no friends that do this stuff other than the friends that I've met here or in social media land, which I'm grateful for. So yeah, people's objectives when they are being public figures or whatever, or trying to be so-called public figures, they don't really help, especially in this trading industry. They really don't have the right intentions. They may act like they do, but I mean, the way that they treat their subscribers, the people that are gracious enough to give them time in a vastly overcrowded environment such as YouTube and just social media in general, the fact that they take time out of their day to spend time and listen to what these people have to say, I mean, it should be a lot more appreciated than it really is. And, it's part of why I started my channel. Even if it was one person. I mean, sometimes, the views are, they fluctuate here and there. But even if it's one person forever that's here hopping on with me to learn, that's worth it, because that one person can change their life. And I've been blessed to be able to do what I do, to learn how I've learned through all the crap that I've been through. And, I'm not in an environment in my life where this would be given to me. Even the information. Generations would not know this stuff if I didn't learn it. I have my little brother learning this stuff, and he's 18. I'm 30. It took me years to figure this out. It took me 25 years to learn it. Almost 6 years. So it was like, what, 24 and a half-ish, something like that. It's education that helps you realize what trading is. Yeah. Yeah, and just the fact that when you get exposed to the world of financial literacy, you realize how intensely things are hidden from us. Like you realize why the rich stay rich. It's not because they're evil. Some of them probably are, whatever. But the rich stay rich and their families stay rich because they pass on the answers. 70% of the wealth in America, 75%, are in the markets. I mean, that's a huge percentage. And wealth is obviously built through other things too, other assets like houses and different stuff. But if so much wealth is in a particular area, and if you talk to any rich people, they've traded in some form or fashion, whether it's long term or maybe they do options or whatever the case may be. They're engaging in the game, and this game is open for everybody. But if you don't know about the game, if you don't know it's there, how can you play? How can you learn what's there, what's available to you? And the rich pass this on to their kids. So I am not rich yet. Eventually will be, by the grace of God. But, my little brother's already doing this. He's gotten the mindset of online business and making money online somehow because I told him when he was 15, 14. And now he's, about to be 20. Now he has an understanding of things, what's available to him. And he's been smashing all the things he's been doing online. And it's amazing to see what a little information given to such a young mind, what belief it can instill in them and how much different life can be if they just get guided into the right things. And whether they use it or not, obviously, is subjective. Some kids like to just get high and do all these dumb things every day. I know I did. I was an idiot when I was younger. I was reckless beyond belief. So it's another reason why it's astonishing that I've been able to gain this skill set. It still blows my mind as well. Followed you on Insta. Beautiful. I'm gonna butcher your name, brother, but hey, I appreciate you being here. I appreciate the fact that you came here from Instagram. My Instagram's a gold mine. Everything that I share there is literally focused on the mindset cultivation. And then, of course, I'm mixing in some technicals too, but I keep a lot of the technical logic for YouTube because then I get to get into detail. I don't like, 1 minute here, 1 minute there. Hey, this is an order block. Hey, this is a blah, 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 blah. There's more context that's needed to certain things. And I like to get the big picture into people's minds. But yeah, Drejesh, if you're still here, brother, definitely go follow my Instagram. And it'll be very helpful. And again, if you have any questions, let me know. Start from ICT's 2016 stuff. You're going to be confused. It's not all going to make sense. Prepare for that. Focus on risk control, okay? And set your goals. Set reasonable goals. Like the goal of everybody is to get a Lambo, to get rich, and do all these things. There's bridges you have to cross first. You have to get clarity. If you can get clarity, then you have the opportunity to be profitable, right? Yes, sir. But please post information. For sure, yeah. For Instagram, I definitely have a plan to post a lot more. So it is somewhat motivational stuff that's posted on Instagram, but then again, you have to look at it as there's things being talked about, certain things like expectations, risk control, different perspectives on how you should view your journey. There are, of course, there's a lot of motivation, but I don't want it to be looked at as purely motivation. It's a lot of the things that help shape my trading psychology. Like every clip that I post was from something I listened to a whole 3, 4, 5 hours of ICT talking, and me picking out different things that I feel have been impactful to my mindset as a trader. Not just like to keep me motivated, but it's also to kind of shape the way that I view trading as a whole, and shapes my mindset in a trade, and what my expectations should be. Because it's very easy on social media to get pulled into a bunch of idiotic ways of thinking that are just not going to serve you well. I know I had to deal with that. That's why I'm so heavily into trying to share the proper mindset. And it's not everyone's cup of tea, obviously. A lot of people just, hey, send me a signal, please. I'm trying to get out of debt or something, right? And okay, like that's a wonderful thing, and maybe it does happen, maybe it doesn't. You know, if you follow rules and take, things that I share, maybe like the analysis helps you get into entries or something like that. So be it. I'm not a financial advisor. That's not advised, obviously. But hey, if you choose to take that upon yourself, so be it. And I hope there's positive things that take place. It's happened before, but of course there's no guarantees, and I'm not a financial advisor. Make that clear. So YouTube doesn't destroy me. But yeah, so definitely dig in. I will definitely take your advice. You're not the first one. You're like the 20th, 30th, 50th one that's told me to get more educational reels going. Maybe I'll post some more long form posts instead of reels, because you only get a minute and 30 seconds for reels. There's some things I can probably add into it, but yeah, I'll definitely take that into consideration and make adjustments there in terms of the content. But yeah, just when you're looking at some of the things I post on Instagram, though, if you guys do come here from Instagram, don't look at it as motivation. Right? It's things that are being said to shape your mindset towards how you operate in the market, because that's how I've used it, and that's what made the time well spent. Because people look at the long lectures that are talked about or that are portrayed by ICT, and it's not all technicals, and they look at it as a waste of time, but it's not. It's 33 years of wisdom being told to us, given to us on a silver platter in terms of mindset adjustment, expectation adjustment, sometimes risk and technical adjustments. What to expect, different like for example, this overlapping view I was talking about earlier, right? This overlapping view presenting us with low probability conditions. I didn't get that from a lecture, a visual lecture ICT taught us, right? Or taught in any capacity on YouTube or in his private community. It's from a Twitter space. He mentioned it in a Twitter space, and most people miss that because they don't want to sit and listen to this stuff, right? But I would have not known this topic if I didn't spend the time and listen to those things that are, those long elements. And obviously I've posted something like that as well, right? It's part of his golden ladder framework that he talked about in one of his Twitter spaces. And it's on my Instagram. I shared it, right? But if we see something on my Instagram and we think, oh, it's probably just motivation, and we skip it, we're not going to be able to see that there was actually something there that technically helps us, right? Of course, it's mixed in with some motivation stuff because it's needed. And it's very helpful to a lot of people, obviously. But there's a lot of different things that are shared and shown through him vocalizing certain things other than just, it's motivation. It's got music and, slight music in the background. Maybe that's what tells people it may just be motivational. But yeah, I gotta figure out how to adjust that, because you're not the first supporter that has told me that, and I hope that this is kind of adjusted to thinking. Now, again, too, there's like experience too that you're going to go through that's going to make certain things more meaningful down the line than they would be at this current moment. Like a person that just starts trading, if you tell, hey, if you're like, hey, this order block is important, they'll be like, what the hell is that? I don't care. Right? Like, how do I call bias? And they'll just disregard the piece of information because it doesn't mean nothing. But as you improve, as you get more secure with the lingo, and from either hearing me talk about it or through the studies that I recommended you to go do, which is the 2016 stuff, and figure out the basics and stuff like that with basic candlestick understanding, what's a broker, so on and so forth, things will start to be a whole lot more important to you as you continue to progress. It's a process, right? You can't tell a mechanic, that fixes cars about how, like a transmission, right? If they're just trying to figure out all the basic components to the car, if you talk about transmissions, right, like replacing those or whatever other important things related to a vehicle, it's not going to mean as much until they get to that point. It's the same with this, right? We're constructing this very complex puzzle, and one piece goes before the other. And in order for us to really appreciate certain piece of information, in order for us to arrive at particular areas like reliably being able to call narrative and bias, or for us to place importance on things like order blocks, right, or some of these other buzzwords, we also have to understand some of the the pre-context pieces of information in order for us to fully appreciate the importance of something like an order block, or psychology in trading. It takes time to appreciate things like that, and I know it took me a while, but once I realized that it's more than just certain things, I have to really focus on risk and all these other things. I started focusing my attention where it really mattered, and some of the things we've talked about today is assisting you in identifying what truly matters. I do editing as well. Okay, edit for you. Try posting personal content. Sir, but people like me need different type of content. I'm going to take action. So in terms of different content, if you could specify, that'd be great, because then I can obviously cater to the needs of my supporters. But that's the whole. Again, I just want to remind everybody that's the whole reason I'm here. It's to cater to you guys. It's not any ambitions other than that. So yeah, just if you could send me maybe a DM. I mean, you could leave it here too. I'll look at the comments as well. But if you could send me any specifics, I can probably guide you to content, or maybe some stuff that I do. I'll figure out a way to push you into the right direction. Again, it's going to take time. Expectations need to be set properly, because I don't want you to get discouraged. Many get discouraged before they can break through. And it's unfortunate because, they're probably this close, right? Like right across, like one step forward, and they would have been able to get a revelation of clarity, but they quit right before they got to the gold mine. So keep the expectations in terms of, where you're at. Like you're new, so you want to get all the lingo down. You want to start getting familiar with different ways that things are explained. You don't want to have too many voices. It's best to obviously start with someone that is honest. And of course, ICT is rooted in everything. I will never take away from the things that he's given me. He has mentioned before to both his private students as well as people on YouTube that anyone that's created their own models inside of his content, it's going to happen. You're going to make your own way of doing things. So he affords that to us, so we can create our own stuff and find ourselves. So we're not attached to him the whole time. We can spread our wings and fly and do whatever we want to do with our own stuff. You know what I mean? We'll finish the stream later. Okay, for sure, Sufi. Appreciate you for sticking around. But yeah, we had a couple pretty important things we had to dig into for Mr. Drijesh. But appreciate you for staying on as long as you have. Appreciate you, brother. But yeah, so I hope all this stuff has been helpful. Obviously, there's going to be a lot of students that are more advanced, but I really hope that some of this stuff that was talked about helps you out, brother. And definitely follow me on Instagram. Let me know if you have any questions. I'll be more than happy to send you some resources, and you could join my private community or my free Discord. And then eventually, if you decide you wanted to jump into a more private community aspect, I also offer that as well. But of course, that's entirely up to you. It's a personal decision, obviously. It's not mandatory, but that is always an option for you guys. All right. Paramjeet? I hope I said that right. Okay, I'll for surely check what you sent me later. But yeah, so just to wrap this up, right? If things are overlapping like this, that means low probability unless we break out of it. You notice that the indices were also very consolidated as well. Very much in a range. So unless it was going to break out in some capacity, there was not really a fully reliable overall direction. And that's made things more difficult for many traders. Those of you that have been here with me since the start of the year going live, you've seen we've been able to call out a bunch of really amazing trades even inside of that chaotic mess. So hopefully now things start to open up a little bit more. But again, it's all based on the process. The things that I talk about, the things I highlight and say are important, they all lead us to the ability to be able to navigate any condition. And there's a model I use, market maker buy and sell models, that affords us the ability to trade universally. We don't need a bias. As long as we can identify certain liquidity pools, aka some of the ones that I've mentioned, and then we could navigate within the intraday volatility, which is what we do on the days that we trade, right? Showcase that skill set as well. Then you're able to have opportunities all throughout anything, So yeah. So again, keep this in mind, right? When things are very overlapping, they are low probability. And all the other stuff that we mentioned as far as identifying particular things, it's all. You also want to note pretty much all the things we talked about today in terms of condition analysis. So yeah, we're gonna, like I mentioned earlier, continue to monitor this, see if these levels are gonna hold. If we do start to seem like we're gonna dive a little lower, we have this fair value gap and we have all the quadrants in there. So those are the targets to the downside we have to work with before we were to then, maybe assume that price is going to come down into here. We'd need more evidence to that. And we'll see if we get it, right? We may get it next week. Maybe it slides on through, maybe some of the other assets start to support that idea. Okay. So we're going to continue to monitor how that operates. And I think I saw one of my friends join earlier. But yeah. What's up, Hive Link? Yeah, I just seen you. Just seen you. You just scrolled through my thing right now. Appreciate you hopping on too, brother. But yeah, so we're going to watch the daily volume imbalance and all these other levels in here. And if it does target to the downside, I wouldn't be surprised, right? The targeting would be this low here. This is a daily low. But it's also coupled with this fair value gap. And then if it punches even lower into that, the quadrants in this fair value gap become important. We also have the midpoint of this. If it stays above the midpoint and can't fill in the rest of this, and it starts to displace to the buy side, maybe we go down here and then get back above the daily volume imbalance. If that takes place and we stay above that, then that starts to set the stage for me to trust further buy side will probably be targeted. But otherwise, right, if it just stays below this, continues to maybe destroy anything inside this fair value gap, then we can then adjust to the low of the fair value gap. We can then target the low here, and then that would then translate to us targeting the downside. Until it's proven, at least for this asset, I'm going to continue to trust that, at least going into this week, that we're going to try to target this fair value gap. If it opens up and stays above these areas, right, and it just starts rampaging higher, then we have these relative equal highs up here that could be a target. Because NFP is here, because of any news event that's like that, you go into the week with a limited view, very flexible bias overall, because anything can happen with these specific news events. Something one of my students mentioned in my private community, he mentioned it's an interesting study to go into each month and observe how NFP, or even for the week, right, go into NFP and FOMC days and study it from a monthly view and see the impact that had in terms of the monthly power of three, in terms of FOMC, NFP, so on and so forth. Because they're such dramatic events, sometimes they play a role in terms of the manipulation or just the start of a particular move in a given month. Okay, so very interesting study for you guys to go and do. And then, of course, I mentioned something else as well a couple weeks ago about how higher time frame delivery on like a higher time frame point of interest, like a PD array or a higher time frame level, using the economic calendar is like using the macros on the lower time frames in terms of timing a move. But the economic calendar is that timing element for the higher time frame, like daily chart, sometimes weekly chart. So if you're looking for a particular idea to deliver from a level, like say, fair value gap, or maybe even identify the run to that fair value gap on the higher time frame, you can use the economic calendar to identify when it could potentially start to attack that level. Or if it reaches into it, like say it reaches into the daily fair value gap before it gets into the news event. Maybe when price gets down into that before the news event, it'll hold itself in there. And then once the news event comes in, maybe that's when it delivers out away from it. Does that make sense? I hope that clicks with you, because it is extremely interesting to see how that's present, right? It's like the economic calendar is like a macro tool inside the higher time frame delivery. I've never heard anybody on social media say that, right? I've never heard anybody talk about that at all. ICT's kind of mentioned it a little bit. He never broke it down just like that though. Like using the economic calendar as a macro tool, like a timing tool for higher time frame delivery to a particular level or away from a particular level, inside of obviously the narrative you're deciding to commit to. Okay, so very, very interesting studies for you guys to go into, the next week with. All right. So yeah, we're gonna see. I would like this to be reached down into. If it fails to get down there, and it just starts rampaging higher, that is interesting for me to then start to target buy side. If not, then obviously things are not fully in alignment between the euro and the GBP. You could see how we've left these equal highs up here. But if we're going to see continued weakness because of the dollar possibly gaining some interest to the buy side, then we'll be able to confirm that fairly quickly, especially after NFP, because again, like I mentioned, it's going to have a dramatic move from that news event. So we're going to see, and NFP is non-farm payroll, so it has to do with jobs, the job market. So if something's negative or positive affecting that, it's going to have an impact in the markets. So we're going to see what that impact is going to be, and that'll pretty much set the stage for potentially the whole month. Or it may end up being the part of the manipulation, be used as a manipulation, and maybe give us some context behind that as well. All right, so yeah, that is my assumption for the currencies. I'm going in with a light narrative because Euro's consolidated, so there's cracks in correlation. We are kind of dropping already, but we're going to see how impactful that's going to be. We got this fair value gap down here. And then as far as PD arrays for the euro, I mean, you can definitely mark off this as well for a daily fair value gap. If we get down below this daily fair value gap here, right, say it pumps lower, smashes through it, then obviously my eye goes directly to here. Before it gets into there though, we have this previous day's low, this one as well, and then of course this large wick here. We'll see how those levels behave as well, given what we've talked about on a couple occasions, including today, in terms of the wick behavior. I hope that makes sense. We'll continue to monitor how that behaves. But now we're looking at DXY. So we have this large weekly bullish order block, and it's very telling to see how this weekly bullish order block has held. Right? If it would have closed below this, my interest would have been possibly targeting the lows for a more protracted downside delivery. That still could technically take place because now we're pulling back into this order block. Right, so we're in between this weekly bullish order block 50% level, and we're also in between the bearish weekly order block as well. And it's kind of just, again, been overlapping a bit, kind of slowed down. So we're going to see how price is going to behave here because the yields are dropping, but the DXY is rallying. So there's a crack in correlation between this market and what this market is showing us. Generally, as a rule of thumb too, if we see the DXY consolidating or going against what the yields are doing, generally the DXY is going to eventually fall in line with what the yields are doing, because this market dictates and influences heavily what the DXY ends up delivering to, right? It ends up dictating what it's going to do, the DXY versus the yields, because price delivery in the DXY is so heavily influenced by what the yield market does. Economically, that's just how that's how it works. That's why this is so important, and that's why the bonds are so important, because these positively affect what the indices and the foreign currencies are going to be doing, right? So if this continues to rage higher, we may end up seeing some type of turnaround bullish in the indices in some capacity. Now, whether it's a retracement bullish that's aggressive or not, obviously, again, we're holding a light narrative just to feel out how the start of this month is going to go. And then, of course, as this week passes, we'll have more of a solidified, longer term view. This month also, for those of you that don't know, on the 16th of this month, it's the new quarter. So we're going to be going into the second quarter of the year after March 16th this week, or this month. Okay, so we'll have a quarterly analysis as well that we're going to do that's going to be pretty helpful too. There's a process with that too. There's a monthly process, there's a daily process, there's a weekly process for analysis, and then there's a quarterly there's a yearly analysis process that we do to gauge what the start of the year could potentially favor, right? So again, these are all different pieces that are going to come into play when the time comes. So definitely be on the lookout for when we do that as well. The 16th of this month is going to be the new quarter, right? Just to make sure you don't miss that, okay? And if you trade futures, that's when the contract month will change, and we'll talk about that as well, as far as how to see information related to that. But again, we'll do that when the time comes, okay? So yeah, looking at the DXY, we want to make sure we're observing the midpoint of this. We see that response. It's pretty telling how it behaved away from that so aggressively. So we're going to see if that's going to continue to support itself. If you look at this time frame, we see that there has been run-on stops. We see that 50% level of the weekly order block being respected. See a run-on stops here. Shifted market structure above the high. The only time I kick back into bearishness is for the DXY is if we can get a quick response away from this order block in some capacity. If we blow out this daily fair value gap, again, we're just building a narrative and further support the price is going to then continue to target buy side, right? So we have this previous week's high here. Let me actually make that a solid line real quick. I don't know why I had it as a dashed line. So we have this previous week's high up here. You see these gray little lines here separates each week. It's just one of those indicators that helps me figure out or navigate, so it consolidates my thinking. So I'm not sitting here thinking, oh, okay, right? Like if this was off, I'd be like, all right, where's Sunday at? I'd have to sit here and spend that takes too much time. Even if it's like a minute or so, it's too much time. I got too many things to already worry about. So I just get this indicator, throw it up, helps me identify the weeks, and I can find easily weekly high, weekly low, or you can easily just go to the weekly chart, identify the high and low, previous high and low. It's very simple ways of doing that type of navigation. So hope you guys implement that. Very important. So yeah, we have Friday's high here as well. That lines up with the previous week that just passed. It lines up the high, and then you see the previous low, right? That previous week's low, previous Friday, right? The low there, it's going to be important. We got the previous week's low down here as well, right? So this low and this high, previous week, very important. If it's going to go higher and attack the high up here, it's going to have to blow out that high again. If it's going to retrace, then do that, it's most likely going to blow out this Friday's low from the previous candle, because that's the near-term liquidity as well. I wouldn't be surprised if they do that, right? Come down below, hit this daily fair value gap, and then rally. Given what we see here, if this continues, right, we want to monitor the behavior at the midpoint of this fair value gap that we've now traded entirely, right? It traded the entire area. And if it retraces, can't even get down to this and leaves this open as a breakaway gap, and it respects the midpoint of this and runs higher, that's indicating we are in a very strong DXY environment. That would overall support the downside that's taking place in the indices. All right. So, there's just some things you're going to want to pay attention to going into the new week with DXY, how the midpoint of this current fair value gap is being delivered. Is it going to run into it and then expand aggressively away from it? Because then that would mean we're not probably going to come back to this fair value gap, and we're definitely going to probably leave this for some other time, maybe throughout the year, maybe sooner, right? Who knows? But yeah, this is left open. That's a breakaway gap, supportive of bullishness. If we can't break through the midpoint of this daily fair value gap here and it just rallies away, supportive of bullishness. If some type of wick is created and we retrace into it and can't even break into the midpoint and just keeps running, supportive of bullishness. If bullish PD arrays continue to be respected and we keep creating inversion levels as we are marching, in this case bullish, supportive of bullishness. So all these different signatures are supporting bullishness if they continue to show themselves. And then if we can eventually get the interest rate markets to support that, right? Bullishness in DXY would have to see bullish yields to support it and bearish bonds, right? These are the bonds. These are the yields. They're doing the opposite of what I'd like to see if I'm going to use that as a tool to confirm buy-side delivery in the DXY, right? We'll see if that continues, right? But again, if the bonds and yields continue doing what they're doing and they look like they're deeply committed as they look, right? This looks committed to the sell side for now. And the bonds look like they're committed to buy side for now. And they got a really clear target above here that could easily become the target. If that does continue the way that it's going with the interest rate markets, then eventually, right, we may see the DXY start to favor shorts, and then maybe we'll see the run lower below these lows here maybe result in the indices going higher, right? We're going to talk about the indices in a second. Right, so, but again, when it comes to the overall DXY here, I wouldn't be surprised if tomorrow, later today going into tomorrow, opens up and declines for power 3 if it's going to be bullish. And then again, I'd like to see a response. I'd prefer, if this is going to stay bullish, I want to see the midpoint of this hold. If not, I can afford it to drop down into this. But then once it gets down to this fair value gap here, it's going to have to respect that midpoint. If it doesn't and it just starts slamming through it, then again, we adjust our focus back down to this level here. But unless that's proven, I'm going to continue to trust what we see here. That's a shift in market structure above 2 daily swing highs. That's a daily fair value gap getting blown apart. We see this fair value gap also getting blown apart. That's very supportive of price continuing to go higher. We have a logical target up here. That's a previous day's high here. All right, that's in line with the 50% of the weekly order block on that weekly time frame. Okay, so that's just something to keep in mind, obviously. Within that weekly order block, again, there's that previous day's high here from Thursday, February 13th of this year. So if we get close enough to that, that becomes a target. We got this large wick up here. If we're going to target this buy side high up here, this fractal high, the wick breaking that down into quadrants affords us multiple targets on our way to that particular level. So it's just showing you that how you can expand targeting, even if you're targeting a final level like, say this high here. There's ways to frame targets and profit take all up into that area. Even if it's just, you're framing out a setup just to run, 20 to 30 points in the NASDAQ, say we're close to this level. If we're targeting this level up here, this high, you could frame targets before you get to that point. So that's the importance of why I'm mentioning that as well. And not just saying, hey, we're going to come up here, right? Because you could break things down and find more opportunities and justify particular ideas on our way to a particular higher time frame level. There's ways to break it down. And so I hope that clicks and is useful to you. So yeah, that's my assumption with DXY. Some of the things I'm looking for. Line in the sand for me for bullishness in the DXY is going to be the midpoint of this daily fair value gap here. If that gets violated, that turns off any interest I have to continue to march higher with the DXY. And then obviously that will result in a particular behavior in the indices. If this was to decline, then indices should, if everything's going to be intact, symmetrical wise, if this goes lower, indices will turn around and go higher. If that takes place, we can justify that as well if this continues in the bonds and this continues in the yields. All right, we'll see if price ends up whipping around to what the bonds and yields are doing, or if things are going to continue to stay disjointed in that regard. Yeah, we prefer to see it kick back in line, and generally they do fall in line, the DXY and the indices and the foreign currencies, with what the bonds and yields are doing. So yeah, keep that in mind. For now, we keep in mind what's happening with the bonds and yields, but we're making our own separate analysis for the DXY and the response it's having with the indices as well, right? So yeah. So if we were to see some type of big turnaround, we may be kicking back in line with the interest rate markets, right? But we'll keep that in mind until it becomes relevant entirely. Okay, but yeah, keep it on the back burner. So yeah, that's my assumption with DXY. So hopefully that sticks as well. Makes sense as far as what we're looking for. Line in the sand is this red line. Definitely red line is crossing this overall low of the daily fair value gap, because then we'll be right back below an inversion fair value gap here. We'll be below this fair value gap. We'll be basically disrespecting this entire fair value gap. And if it's bullish, these bullish PD arrays like this and the order block and now this fair value gap, they need to hold. All right, we need to see it holding price, continuously supporting us to go higher. And if it doesn't do that, then obviously we got to adjust and be aware of those things taking place. But yeah, Friday's high and Friday's low, keep that on your chart. Previous day's high and low, previous week's high and low, previous month's high and low, just as a reminder. So I'm favoring us potentially continuing to go higher unless proven otherwise. And I'd prefer to see us, if we open, I don't want to see a deep retracement. I want to see us respect this midpoint or some of the areas in this fair value gap here that we've now traded through. And then if we can trade away from that, that's highly bullish. So that'll have a dramatic impact on what the overall indices will do as well. All right? So these are very, very important technical aspects of things that I hope are sticking, because again, we do the same thing, talk about the same stuff over and over. It's repetitive. So I hope it sticks because it's extremely important. Okay? So yeah, I hope this makes sense for the DXY. Going on to the indices, we'll look at the NASDAQ first and then look at all three of them as a whole after this. So I see that price has basically taken out the stops here, hit this fair value gap. We pointed this fair value gap out. And of course, these lows, I pointed out well ahead of time, I believe last Sunday. And we could see how price beautifully delivered through all those levels as mentioned. Right? And then, of course, gauging this, I talked about live in the trading call on Tuesday of last week, or this week that just passed. I identified this SMT because we saw the other indices running into, oops, let me erase that. So we saw the overall, I think it was the S&P. So yeah, we got the S&P. Where the heck did it go? Okay, yeah, so we got the S&P here hitting this fair value gap. All right, so we're going to observe this behavior here. Very important. So we see how the NASDAQ failed to hit that same fair value gap. So automatically there's a cracking correlation. What does that tell me? If we're in a bearish environment and we see that one of the correlated assets, those assets being the indices, if we see one of them delivering into the one PD array, but the other one is not, and we're in a bearish sentiment like we are for this example, the asset that fails to do the same as, say this other asset, the in correlated asset behavior, the one that fails to deliver to that same particular point of interest, if we're selling off and we're favoring downside, The one that failed is the one that's going to be the most aggressive. Okay? So keep that in mind. It's very, very helpful when gauging strength or weakness, right? Supposed strength or weakness in a particular asset's delivery between correlated assets. Okay? In this case, it was the failure for the NASDAQ to reach into this, while the S&P and the Dow did actually reach into that at that same moment. And if you go back and look at the video, you'll see the huge delivery. They all delivered, obviously, well, at least between the S&P and the NASDAQ, but one delivered a lot cleaner, right, and was more quick than the other. NASDAQ is generally more quick than S&P anyway. But regardless, the NASDAQ and the S&P and the Dow, if there's a crack in a particular PD array, the one that fails to do the same as the others, if we're in a bearish example like we are here, the one that fails is going to be the quickest delivery. So that's going to show you that sells will be a lot more reliable, in this case, in the NASDAQ, because it's the one that failed to reach into the PD array that the other two reached into. All right, so that's a relative strength analysis. Strength, right? There's no buying and selling pressure, but you could look at it that way if it makes more sense to you. But yeah, if you're going to short, and you see one asset that fails between correlated assets, the one that fails to get into a particular level that the other correlated assets hit, that's going to be the weaker one, the one that drops more aggressively, I should say. And it's the same if we're buying, right? If there's a bullish SMT, say the NASDAQ makes a higher low, while the S&P and the Dow make lower lows, and we're in a bullish condition, because the NASDAQ failed to blow out the low that the other two correlated assets attacked, that's showing that there's more strength in the NASDAQ if we're looking for price to go higher, and there's an SMT, right? So here, let me make this like something you could screenshot. Very important right here, all right? I get so many questions about SMT too, it's insane. So hopefully this clears up some of the confusion some of you guys have. I could find the stupid thing. All right, so yeah, if there's, so let's say this, oops, say this is the NQ. So say this is the NQ. Right, so move this over here real quick. So yeah, if this is the NQ here, and this is the S&P. That was weird. A little lagged response, but okay. And we see an SMT. SMT is, ICT calls it a smart money technique, or it's just a cracking correlation between correlated assets. That being like, if certain assets are correlated and they're supposed to follow each other and do very similar things, if not the same exact thing, which is the case between the three indices, they should be following one another if everything is a healthy, symmetrical market, right? But if we see the, here, let me finish this drawing real quick so you could have it as a screenshot. Okay, so say we have these three assets, S&P, NASDAQ, and the Dow. This view here is going to be the reverse of what I mentioned here, right? So if the NASDAQ is bullish and we're looking for buys, say we're inside of a order block or some type of bullish point of interest that is now going to send us higher. Maybe a fair value gap, maybe a bullish order block, maybe it ran through a monthly low or something of some kind, maybe a previous week's low, maybe a previous day's low, and this is happening on maybe like the hourly chart or something. But whenever you see something like this taking place, okay, and you're looking for buy-side targets and you have 3 correlated assets you look at, maybe it's 2, right? It happens with the Euro and GBP as well. But if you see something like this and you're looking to find buy positions between 2 assets you observe and trade, say the S&P or the NASDAQ, the NASDAQ failing to do the same thing as this, that's showing you that there's an unwillingness for NASDAQ to blow out sell side. But there's a willingness for the S&P to do it. Now, although they move in the same direction, right? Say they both ended up going higher because they're correlated, right? So they're supposed to do that anyway. Just because they both go higher, right? If you see something like this, the one that failed to blow out the low within that correlation, that's going to be the one that's going to be the more reliable, more dynamic buy-side delivery. Okay? So whenever you're observing the SMT delivery and you're looking for, say, a bullish example, the one that you see that fails to do what the other correlated assets are doing, like in this case, a failure swing to the downside, while the S&P blows out a low and the Dow blows out a low, if you're in a bullish scenario, you want to go with the one that fails to blow out the low, right? And say the S&P does it, right? If the S&P does it, say we switch this and the NASDAQ blows out the low, the Dow blows out the low, but the S&P fails, then the S&P in that case would be the one that would probably show you the more reliable buy, assuming you have trust that we're going to go higher. So again, it's the same thing when we're looking for shorts, right? So because the NASDAQ failed to break inside or reach inside this fair value gap here, but the Dow and the S&P did actually reach in and created this high above into that fair value gap, the NASDAQ was assumed to be the weakest of the 3. And guess what? It delivered the quickest. If you go back and do the study, yes, for the most part, the S&P and the NASDAQ went in the same direction. And there was a tradable event on both of them, right? But using this identifying tool to identify which one out of a group of correlated assets would be the more reliable delivery overall, right? Generally, the one that makes the failure swing, in this case, to the buy side, right? It failed to get into the fair value gap here, while the S&P did. That's going to be the one that has the more aggressive downside delivery. But then again, if you flip it to the buy side, it's going to be the same thing, but it's going to look like this, right? The S&P and the Dow have to break their lows. And if you see NASDAQ as the one that has the Kraken correlation similar to what it did over here in the reverse, the NASDAQ would then be the one that's more favorable and more dynamic to the buy side. Okay? So that would be, this tool is extremely important. It helps gauge strength or weakness, right? Supposed strength or weakness, or you can look at it as more interest to do, one thing over the others. It just shows you which one's going to be more dynamic. So obviously you're going to have to decide whether you can trade the S&P if you only trade the NASDAQ, or, if you only trade the S&P, right? You'd have to think, like, is it worth me getting into it if it shows that the NASDAQ and the S&P has that crack, right? Or am I going to be interested in taking either one that shows me that crack and correlation? It's a skill set that you have to learn, right? And learn to trust. But if you go back and do a study on this and gain a bunch of examples, you'll see that it's highly, highly important. And this is also a time where you can observe a change in the overall delivery, right? Price, when it makes a turnaround, whether that is an entire turnaround to change a trend or just a turnaround to retrace, if you look at correlated assets that are going to present you with that change in the direction for either a short time or overall, it only has 2 patterns that it does. It's either going to blow out the low and shift if you're bullish, or it's going to give you a failure swing. and do it. Okay, and of course, the thing that can be in common, especially if it's across the board with correlated assets, this is going to happen at a higher time frame point of interest, or a higher time frame liquidity pool, or one of the PD arrays, so on and so forth. So that's the thing, when you're trying to gauge overall changes in direction, it's only you got to observe one of these two things. And again, if you have correlated assets in conjunction with that, then obviously it could be a very helpful tool as well. Okay, so yeah, with that out the way, I hope that was helpful. I get so many questions about SMT and risk and all these different things. That's why I spent so much time today talking about it. But yeah, for us going into the NASDAQ and the S&P and stuff that's taking place for the start of this week for the indices, we see that there's been an aggressive run below the low. So I'm definitely going to try to see what takes place here in this fair value gap. Again, just like we did on the other assets, we're going to look at Friday's high and Friday's low. But we have this daily fair value gap that we need to see what the behavior is going to be like inside of. So yeah. And of course, depending on, we also have this large wick here as well. So we're gonna measure this out. We're gonna get the measurements here. All right. So yeah, now we have a good little skeleton framework. We have possible relative equal lows down here too. So if we do see a beautiful response, if we could see a nice response off of the fair value gap here, that'd be great. Again, just like the other assets, when price opens up to start the week, if I'm going to be bearish, I need to see this respected. If it starts to blow past the wick midpoint here, we're starting to rack up the PD arrays that are now being violated. One thing that is a bit concerning for the delivery here, continuing to drop, at least like right from the start, is the fact that price blew out these significant sell side liquidity pools, and now price is aggressively pulling to the upside, right? It stayed above. It didn't spend a lot of time below the liquidity here, which, I mean, generally that's normal, right? If we blow out a significant high, generally it's going to run back. We've been so aggressive also, so that's probably a reason why it had such an aggressive pullback as well. We need some more things to change in order to trust it going higher. We need our 3 PD arrays to be violated to the upside. If that's going to be something that we're going to trust to the downside. I mean, if we're going to see price stay bullish, it needs to blow out these 3 PD arrays, right? So one here, the midpoint here, and then, get all up into this area. And then, of course, we got this wick here as well. So if it just starts rampaging, our eyes directly go to these highs up here. Okay, so those are the most near term from this daily time frame as far as liquidity is concerned. But if it's going to stay bearish, we obviously can use these 2 liquidity pools, the midpoint of this wick and how it behaves as it punches up into that, along with this fair value gap. If it respects that, it's going to continue to support us dropping deeper, possibly into this level here. If you identify this low next to this low, that's technically relative equal lows coupled with a fair value gap. So we're going to keep that in mind. You can also make an argument for this fair value gap over here. Okay, you can measure that out as well. See how price behaves. So if price has already really aggressively swept the lows and now retraced back through this fair value gap here. So we're going to see how price responds to this level here, the midpoint of this wick, along with this daily fair value gap here as well. And how price behaves there, I mean, it's going to be significant as far as us gauging how bearish this market is actually going to be and whether it's going to really leave a lot of this stuff up here. Because if you take from this low to this high, this whole entire area is a balanced price range. Like I mentioned that last week as well, right? So I said if we're going to respect this and continue to drop, we're not going to come back and contest any of this because this is a balanced price range. Okay. I mentioned that again last weekend when we were opening up in price. Said once we blow out this low, it should not even attempt to come back there. You can go back and see that I mentioned that well ahead of time, and you can see SMT as well. Pretty much everything that we discussed that would support price continuing to drop came to fruition. And now that we're down here, we got to gauge. Okay, we spent little time down here, swept out the lows. We now left relative equal lows here with another fair value gap if it is going to continue. But now the areas we want to monitor as we go into this new week to possibly set up further shorts or continue to support us in favoring shorts is going to have to be these levels here. The midpoint of this down wick, the fair value gap here, and then of course if it breaks through that, then of course again my eyes go up into this level. And that's pretty much everything I have at my disposal here at the current moment. You can make the argument too. I already have these levels written down, but if you want to mark them on your chart, you can. It makes it too foggy for me to be focused, right? It's too many things going on if I label it. But we have a new week opening gap here. This one's a little far away. Each gray area has a new week opening gap. That's another reason why I like this indicator. Again, for those of you that don't have it, definitely get it. It's the week and day separator. Okay, any of them is fine as long as it gives you the ability to highlight every Sunday. So then you could frame out your weekly highs and lows easily from the daily chart. And then of course you can also identify the new week opening gaps, right? And then you could see how each week is utilized liquidity wise. It's like a helpful thing that helps consolidate your thinking. It doesn't tell you when to trade or anything. None of my indicators do that. It's more or less just highlighting certain levels in price or areas that I don't want to lose track of, because we already got a lot going on. Okay. There's a lot of things we got to pay attention to and manage our mindset and all these different things. So anything that can be used as a tool to consolidate your thinking, I mean, hey, it's very, very helpful, right? So definitely go grab that. But yeah, using this indicator, right, based on what we see here, we could see there's this new week opening gap here. We have one from way over here that may continue to be utilized. We'll see. It looks like we're pulling back into that. We'll see if that has any use. We have one up here as well. So if price was to attempt to get up there, we'll see if that has any impact as well. Then we have this too. This one actually overlaps pretty well with where we're at currently. So that's just another layered reason why if price was to reject from here and not really do much, right? That could be a far off reason from a couple months ago. It could be a far off, useful point in price that can reject price or support price being rejected from this little area in here, overlapping with the daily fair value gap, as well as the overlapping down wick here. That should also support us going lower if we're going to continue to make an argument that maybe this low is going to be violated on its way to attacking this low. And maybe if we're lucky or if price is excited enough, we can get another insane run like this. I don't personally think that's going to take place, but hey, who knows? Nobody gauged how vicious this was going to be. It came out and whipsawed and then ended up destroying people that didn't have an understanding of the downside narrative. And we have been in front of the downside narrative since this huge displacement took place. When we left this fair value gap along with this one and couldn't even attempt, that is price showing us that was a balanced price range. And then once it got down here, there was no logical reason for it to come back up there. And again, we talked about this well ahead of time, before the fact. So if you want to go hear that mindset and what was being talked about before it happened, you're invited to go do that, because a lot of things that were talked about that were very helpful, leading us to trust this. But again, we're here, right? And so the fact that we're here, we got the level here I mentioned, we got the fair value gap and this down wick. We want to see what takes place. I wouldn't be surprised if we open up, run into those levels, use them as resistance to then push us down below this low. It needs to obviously show us that that's going to be what's going to take place. We're going to go in very light-handed. We're not going to push heavy-handed for this week. But if there's any opportunity that presents us with the chance to get in with something going lower, and these levels continue to be dynamic, supporting that, obviously after we get some type of engagement in this level, that would be preferred. And then, of course, if that lines up, then we'll act accordingly. Hopefully, something like that can happen on Tuesday, so then we can do it live, and I can do it with you guys, right? So yeah. So to put a ribbon on this, let's pull up all three of the indices. Kind of go see what's been taking place. We do see that there's an S&T that is here. So this here does support what the bonds are doing. So remember what I said. Sometimes if the bonds and yields are doing something, the indices in the DXY, if they're doing the total opposite, may get pulled back into what the bonds and yields are doing. All right, so because we see that large S&T at the lows here, obviously I need to see more evidence that that's going to be, that everything's going to turn around, right? I need to start seeing, the levels that we mentioned a minute ago get violated, so then we can get in line. But this observation, the S&T at the lows on this higher time frame, in conjunction with the bonds and yields supporting potential continued buy side, which should eventually result in the indices turning around and going to the buy side, and as a result seeing the DXY turn to the downside as they look to follow the yields. If that ends up being the case, we now see ahead of time that the bonds and yields were showing us that was what was coming, especially since we see this SMT here. Again, because of what the current delivery is, we need to see more evidence of that. Okay, because this can easily stay out of correlation for a while. They can keep it cracked in correlation for however long they want. Eventually, things will whip back into correlation. But again, we need to see more evidence and use our confirmation tactics to then trust what direction price is going in. But look, if that does look to be what's going to take place, we now have an argument for flexibility, so we can then get back in line with something that goes against, say, the downside delivery here. All right, we can reliably trust that if bullishness does take hold and we blow past the fair value gap and we blow past this wick here, and the bonds look to continue to rage higher as we assume that they would, if that takes place, then we can easily adjust and know that back-end information is supporting us in that flexibility. Okay, so I hope that makes sense. We're going in trusting whatever it's doing right now, but we're considering the SMT at the lows and the overall bullishness in the bond market as a possible use case in adjustment, right? If we need to adjust, that's what we're going to use as justification to adjust, right? But because NFPs come in this week, we're keeping a flexible mindset, and we're painting out the scenario that's going to allow for flexibility, because you're never going to know exactly what everything's going to do 100% of the time. Things are going to go against you at times, and if there's certain things that can conflict with your analysis, you have to keep them in your mind, in your notes, as you continue to monitor price. But then once things start to trigger that opposing view, considering the fact that we have such a repeatable process, and we got to make sure that 3 PD arrays are violated, and we understand the bonds and yields relationship. We understand that they are out of alignment with the DXY and the indices. But if they were to kick back in alignment with each other, we're able to then adjust, right? So if the indices start to really rage higher, all right, say the Dow continues this insanity, right, and just continues to rampage, breaks through this, and then we see the down wick here, like I mentioned in the NASDAQ, and this fair value gap get violated, and then say maybe the S&P ends up blowing out the high here, in conjunction with the bonds going higher and the yields dropping, which results in potentially DXY also dropping, that justifies a bullish narrative. The bullish adjustment once these levels get violated here, and once these levels get violated in the indices, and specifically for like this fair value gap getting violated, maybe this high gets violated, and then maybe this one and this fair value gap gets violated. That is backed up by the bonds and yields. So instead of thinking bearishness like we're going into the week assuming right now, if those things take place or get invalidated, we can simply adjust. Okay? So that is our contingency plan. And these levels have to hold if we're going to continue to favor downside. If not, there's no reason for us to force sells in a market that may not be, really looking to short. Obviously, if things align. We've been very bearish, so we don't just our bias changes on a day-to-day basis due to retracements. Sometimes, price goes in one direction, right? But then after it goes in one direction, maybe it retraces. So bias can go with the overall narrative. Sometimes it can go against the overall narrative, right? Narrative is what's actually taking place. Because, maybe this is a downtrend that retraces bullish, then that's when bias changes. But once it kicks back in alignment, we're now back inside a bias that supports the narrative. The narrative is the overall direction, right? Like overall, bias can fluctuate because it can incorporate the retracements within a narrative, right? Because maybe the low down here was going to be attacked, right? There's retracements in there, right? So bias changes within that downside objective or narrative, okay? But now that something's taking place down here, we now have an adjustment here that could take place. So the narrative can then switch if these levels are violated from bearish to then bullish, right? Or this can just be a retracement inside of the overall downturn, right? I'm assuming that eventually things are going to kick back in line. So the narrative may go from us aggressively seeking the sell side here, as we've been seeing, right? That may change from a bearish narrative because we swept out significant areas and the bonds and yields are supporting buy side delivery. It may switch from the bearish narrative to the bullish narrative. And then obviously if we're bullish and it continues to go higher, right? Once a retracement was to take place, right? Say price was to run up here and then start to retrace, right? So the narrative would change from bearish if it gets up here, right? Starts violating these levels. Once it starts to retrace, the bias can then be a bearish bias inside of a new bullish narrative, right? So narrative doesn't change on a day-to-day basis, right? It's a good way to look at it, right? Bias does though, right? Bias incorporates retracements. Narrative is overall big picture, higher time frame, what's it reaching for, right? So I've mentioned that before. I don't really hear a lot of people classifying it that way, but that perspective has helped me to understand how to be flexible inside of an overall direction. So I don't change my narrative, because if you're in a bullish trend overall, narrative-wise, and price looks to retrace, and you trick yourself into thinking that retracement is now a change in overall delivery, you're going to get caught up when price kicks back into the higher time frame bullish narrative, right? So classifying these as separate things, narrative and bias, I don't know. It's helped me be flexible inside of the different scenarios, whether we're in a trending environment, so I can classify a retracement while keeping my mind cemented on the overall picture. Does that make sense? So that you may not hear other people talk about it in that way, like bias and narrative being different things, but that's why I classify them as different things. It's just my way of breaking it down separately, so then I can still commit and know that higher time frame direction doesn't overall change, but retracements are sometimes inside of that larger move. So, you know, we're like in this case, we were in a downside narrative that was chasing for the lows down here, which we called before the fact a week ago. Okay? This retracement in there was a bullish bias reaching for some type of opposing PD array to set us up back with the downside narrative, right? So it classifies bias and narrative separately, right? Just so it helps me remember that overall direction doesn't change dramatically, right? Bearishness can happen for weeks. Bullishness can happen for weeks. But classifying them differently allows me to stay rooted in that higher time frame direction while still justifying overall frameworks inside of retracements while we're inside that bigger picture. I hope that makes sense. I never realized how hard that kind of was to drill into people's minds. I never realized that it was something different that I do until, you know, like 2 weeks ago. I didn't realize that, you know, most people don't see it that way, you know. But I just feel like it's helpful to separate those two, bias and narrative, so it helps you stay intact with one higher time frame overall delivery, and then justifying retracements, you know. So yeah, I hope that's helpful. If it's not, I'd be happy to answer questions about it, maybe do a whole video on it, because I could sit and talk about that for days, because that's something that was really helpful. Yo, what's up, Sufi? You caught me right at the end, brother. I was about to put a ribbon on it. We've been going for a while. But yeah, there's been a lot of things that's been talked about. You know, there's been some of you guys that have been with me for the whole long period. I hope that it's been helpful to you guys. I talked about some, you know, helped out some new traders. But the overall analysis process has been the same as it always is. We've laid out what is going to be important for us to look for. And yeah, just the overall process hopefully made sense today. And Tony, I appreciate you. Sufi, I appreciate you. Nutty Fafa, I appreciate you. I know you hopped off earlier, but God bless you, brother. Keep knocking out that school until you don't need to. And you know, so everyone that's hopped on and lasted this long, appreciate you. If you're watching the replay, definitely hope you got value. Hopefully it's before the week starts, right? Hopefully you got a chance to watch it and all the things before the week started, because we talked about a lot of really important things. And so yeah, if you have any questions about any elements, any different things we've talked about, the way I classify the difference between bias and narrative, again, I notice that that's something that most people don't, that's not how they view it most of the time. They just put it as narrative, right? And, you know, if it's bullish, there's a narrative there. If it's bearish, it's a narrative there. No, but I feel like separating it has been something helpful to me. And I've seen it be helpful with some of the others that I've taught in that way. You should do a backtesting video. I should. That's a brilliant idea, Sufi. It really is. Brilliant idea. I am definitely going to consider doing that. 100%. Absolutely. But yeah, I know you guys are probably busy. Sorry to have taken up so much of your time, but I hope you guys have gotten value. And you know, there's a lot to discuss always, and I hope that you guys were able to pull out important elements, see the repetitive nature of what it is that we do here, understand the level of risk control, how important that is, the different elements to our overall analysis process. One thing I did forget to pull up, I'm actually going to do this for completeness sake. Let me pull up the... Talk about seasonality real quick. Can't remember if I posted this in the free community. Maybe I did. Did I share it? Yeah, I shared it. Okay. So if we look here real quick, So we see a significant seasonal low forms right at the start of March. Remember, midway through March on the 16th is going to be the new quarter. Okay, so this seasonal chart here is showing us for the month of March, there's generally over the last 5, 15, and 28 years, there's a seasonal low that forms, and the indices have somewhat of a bullish sentiment. So if we start seeing any type of bullishness take place on the back end of the bonds and yields showing us like that the bonds are going higher, they're going to continue favoring higher, and the yields are going to possibly continue favoring sell side. If that continues to take place in conjunction with us starting to see some type of interest to be aiming for the buy side, it's very likely that the run down below that we saw, this huge liquidation event, was just that. It could have just been a huge liquidation event using all the geopolitical factors as a reason to just manipulate and stop people out to set that seasonal low, which generally happens in March. And then it happens sometime after April, I think in May, right? May is a very bearish month, right? So in May, we're going to anticipate bearishness, but we may see some type of bullishness because you see all three of these lines when they're moving in the same direction, or if they all set a particular low at a particular time we see in the chart using the seasonal chart. This thing is very accurate. If you go study the last 10 years and line it up with how this has behaved, like over a whole year's time span, I mean, it's extremely insane. Like, it shows just yet another layer to the fact that this is repeatable. You can come in with anticipation for price to do particular things, and generally it does it. You can even frame out significant seasonal highs and lows, and then use that to deepen your understanding as far as what you think could potentially take place versus another. So yeah, again, we're just going to leave you guys with this, the fact that there is a seasonal low that forms in March 3rd, right? We're moving into that tomorrow, ironically. So we'll see if there's any interest that begins the bullishness, right? You can see the behavior here. There's a huge dip to go into March, and then things start to gravitate to the buy side all together from the last 5 years view, 15-year, and then of course the last 28-year view. So because that's the case, we'll see if that liquidation event is in line with setting a seasonal low that results in price attempting one more time or yet again, right, to attack the buy side and try to create new all-time highs. Or it could just be a very short-term run to the buy side, maybe depending on what happens in the world, obviously, with the U.S. economy and all that. If we're, take this for example, this is another way to look at this. If we're in an overall bearish trend, right, say the market has not been doing very well in America and things have just been extremely bearish overall, these bullish bounces, right, say the year's been bearish, right? If there's any bullish bounce that takes place, that could be a time of the year, if you're looking at things from a very large time frame perspective, the retracements against the overall sentiment, say we're in a bearish trend, right? If there's a bullish bounce here on the seasonal chart, that could trigger in times of the year where retracements will take place. And just for a small time, be able to have some buy-side interest that you could take advantage of, right? But if we're in a bullish trend, okay, and we see bullish runs, right? Generally, those times of the year are going to be times when it's aggressive, right? If all three of them agree. And when we see downside in the seasonal chart where all three of them agree at certain times of the year, if we're in a bullish trend, generally those downturns we see in this chart here can be bearish seasonal tendencies in the year that could lead us to retracements short term. But if the overall sentiment in the market that we see currently is important to use in conjunction with this. This isn't a be-all, end-all, obviously. It's just another very reliable roadmap that you can use to frame out seasonal lows, seasonal highs. Every new month, I post this, right, with the particular month highlighted. So then you'll have a portfolio of screenshots of this extremely useful tool by the person that ICT recommended to his students. So it's like MRCI or something like that. I forgot. I think that's his website, MRCI.com. He's the best seasonal chart analyzer forever. Okay, since that's ever been created. Because and that's not me saying that, that's ICT saying it, and then me going in and studying the last 10-20 years of the asset I trade, which is the indices, and lining up how beautifully it's followed in both bearish years and bullish years. How each dip, if the overall sentiment for, say, the NASDAQ is bullish, how every single dip at certain times of the years creates retracements. How each low shown at particular months, when everything's moving in alignment, how that is justified in the chart for the last 10-20 years. I've done that study myself. I encourage you to go do the same thing as well with these charts that I give you. It's very, very helpful for anticipation. And again, this is just stuff that people don't like to do because they don't really take this serious. They don't think that this is an actual business. They think, oh, I'm just going to play a video game. And, you can play the game and get out, play the game and get out and not even worry about it. This is a business, okay? And unless it's ran like a business and your mindset's focused on it and your energy is put into it as if it is your business, you're not going to see the results that you want because the expectation's wrong. It's like running a business, not like a business. The business isn't going to work. All right, there's a whole lot of businesses I was talking about right now, right? Business. But still, it's one of those. Again, one of those really important critical aspects that have to be understood. So what's the homework for the week? Well, the homework for the week is obviously to observe kind of, some of the things that I've mentioned. Observe the levels that I've talked about. If you want, right, you can also add on some of this seasonal behaviors, right? Take this chart, go into the month of March from the last 10-20 years, observe that. But more importantly, before you do that, right, this is like a cherry on top for extra overall precision as the years pass. So this study takes a long time to do, to trust, because years have to pass. I've done this for 5 years straight, finding out, what the overall conversation is in terms of what sentiment happens per month and where the lows are potentially on a seasonal basis. Going back and studying that, doing that, but then correlating it to the times that continue to pass, like this year versus last year's March. What happened versus, the last 10 years, right? What has taken place? What is lined up more often than not? And so the trust factor when it comes to this, it takes a little bit of time. But of course, overall, homework always should be to identify the things that I mention, right, that I point out, so you can hold me accountable, right, and see if what I'm saying is true or not. Like, do I follow what I'm saying or not, right? And Sufi, you saw, right, we called one direction, we never switched. In the Discord community, you saw it was continuously, even from the live call trading. I didn't really have as many opportunities as I wanted to, because it was moving so quick, right? And there was some skepticism in the moment, which you saw live, and that's going to happen to the best of us. But overall, all the different things that we've talked about were all in play. Did I overtrade? Did I overleverage? No. Did I allow myself to miss a trade versus trying to jump in? Did I call different spots in the market where there were possible opportunities, and did those spots deliver, right? Even though Tuesday there was, I think I hit the retracement that took place, and I showed that on Instagram. Of course, right when we got off, it ended up, giving a retracement or whatever. But overall, right, we pointed out different things, and it worked out, right? Every opportunity that shows up in the market isn't going to be something you're comfortable with entering. And in these times, it's best to be very cautious, right? So keep that in mind, right? And hold me accountable, listen to the things that I teach or that I share, use what you feel sticks to you. And then, of course, this is something that's on the back end fundamentally that can help you add confirmation to whatever direction you're trying to favor, right? Maybe this month is supposed to be bullish. Okay, well, if I see things that are favoring that, intermarket relationship wise, I have seasonality on my side. Plus, I have these other markets on my side, and if I can merge PD arrays and all these other things, the invalidation tactics we showcase, the other different, like the wicks and stuff, and how different delivery takes place to support an idea I'm looking to see. If all that stuff can continue to be in line, and I can organize that, then those are the homework assignments I want you guys to take away from this. Always, take the process that I share and go in and put it onto your chart. Even if you're not there yet, and all you can do is just take what I show and slap it on your chart. Take what I show, slap it on your chart if that's where you're at, and study it. Watch how it operates. And everything that I do from the start of the call up into, wherever you can, or however long you can like stay on the video, right? Every element that I mention, put it on a piece of paper. Put it in a private Discord. Every element that I talk about that's important, like seasonality or the list of liquidity that I tell you about, or the risk control ideas, or the mindset as far as limits to your trading, the days of the week, the behaviors and high probability versus low probability, or conditions that are more hard versus things that justify a quick move like SMT, like we talked about today. Like all those things I want you to take away, and you don't have to study all of them at once, right? But just take pieces of it and go and study each element. It's like a puzzle, It's like a person that works out, right? They don't just do one workout that incorporates every single part of their body, right? You got to work at one piece: your biceps, your back, your lower body, your core, right? You got to eat properly, right? So there's different elements, different pieces to you being healthy as a person that works out. Well, that's the same thing in trading. There's different elements that have to all be worked out in order to have a all-around reliable process. And every Sunday, obviously, we go over the same principles as far as where we're starting. We're starting with this perspective. We have this news ahead of us. This news is going to affect the week in a particular way. The start of the month, we have a process, mindset-wise. End of the month, we have a process, mindset, and risk-wise. Start of the week, we have a process. Power 3, right? We got to consider that automatically. And then, Sunday, Monday, generally, Sunday we don't trade at all. Monday, we go in understanding consolidation manipulation to set up a portion of the weekly range. Then, of course, Tuesday, Wednesday is generally the more aggressive approach. And then, of course, we move on to Thursday, Friday. Could be retracement, reversal, things like that. Okay. And then, of course, we have the daily ranges, right? There's a process behind that as well, right? Each session has a characteristic that delivers the daily range. Okay. So all these different components, right, that we talk about. And then invalidation, validation. Okay. All these different things should have their own secluded time that you study them in, because that individual time that you spend on each weapon that you're being given, that you're learning, it sharpens the blade, so that when you put all the weapons together, you get one massive, solid, understandable, and lethal way of operating within this battlefield we call the financial markets. Right? So yes, as far as homework, I hope that kind of encapsulates or puts a blanket statement over different homework assignments. And then, of course, whenever you have any concerns or things that are kind of hard for you to do, just let me know, and I can give you a drill surrounding that particular weakness, right? So then we can attack it. That's kind of what I do with a lot of my private students. They come to me with a problem, I give them a solution. And then we get on one-on-ones, and we get on group calls, and we're constantly knocking out problems that anyone has, and then it gets to a point where nobody has any problems. Okay, and then it's just like calls are just the regular everyday call that we do for live trading, and everyone's moving in sync in a unit and getting their own results, and it's amazing to see the progression. Derived off the things that I have used to help myself. It's one of the most fascinating things. from seeing what my brother can do to seeing what you guys end up doing from YouTube and just Instagram alone. I mean, it's fascinating. It really is to see the improvements that take place. You know, it just shows that sometimes you just need an interruption in thinking or a new perspective that could just spark a crazy fire in us that can present really insane results. You know, sometimes we're, like I said before, we're just like this close away, and if we quit, it shouldn't be an option. You know, just we stick around long enough, we end up breaking through the barriers of clarity. And you know, some of the, you know, of course, some of the things that I talk about, it's literally to try to get you closer. You know, 'cause I can't guarantee profitability. Nobody can. Nobody could guarantee me profitability. ICT can't. He says it all the time. But there's, you know, tools that we use that can get us closer, and then, you know, we're expected to take it the rest of the way. You know, it's just like a hand up. So then you can jump on your own and you know, get over the fence. You know. So yeah. So yeah, I've been taking up a lot of your guys' time, but again, I appreciate you guys that have been here. Some of you guys have been here for the whole time, and it's greatly appreciated because you know, I'm trying to give you all as much value. Hopefully, you guys gotten value throughout the whole call, and you know, we've had to talk about some basic stuff, but then again, the whole process hopefully makes sense to you guys as far as where we start and where we end up. Sufi, you are freaking awesome, bro. I love that mindset. You are amazing. I appreciate the love and support. And again, I really hope that you keep me updated with your improvements. Keep being active in the private Discord. And it's going to be amazing to see you improve, brother. Damn right, man. I'm going to teach you, I promise. But yeah, guys, I've probably taken up enough of your guys' time. I know some of you guys probably got stuff to do. But yeah, I hope that all the stuff we've talked about has made sense today. And, you know, as always, if you guys have any questions, let me know. If you guys want to join the free Discord, I have the link in the bio. I have to go double check and see if it's there. If it's not there, I will put it up as soon as the call ends in a minute. But yeah, I hope you guys have a good rest of your day. Let me know if you have any questions. And let's have another spectacular week, right? So yeah, guys, I'll talk to y'all on Tuesday. God bless, and I'll catch y'all next time.